So your discount will come in this, but discount account also we have to prepare. Okay, then I'm going to go on into the business management capital. What goods for resale on credit from their purchases and their paid rent by debit card rent account. Sales on credit to Yash, sales and Yash. Sales and Yash. Put cash into bank account, transfer cash. So paid their money won't be checked after deducting 5% cash discount. So you have paid it, so you have received cash. So cash discount received. Put in discount. So they were in bank, for example, you paid for stationery by cash, stationery. So how many accounts we need to prepare? One. And one cash. Cash flow, this is ledger account as well as for primary. So this is, so first we prepare cash and bank account. So then we prepare all these accounts simultaneously with everything. Okay. So this is a comprehensive problem. So if you have not attended any of the earlier classes, which is based on posting of ledger, preparing ledger, posting of ledger, and all those things. So you can focus on this and you can get a clear picture of what has been done till now. So let us start. First October cash 1,025. When first October. Cash. Cash. So it is balance brought down. Balance. Then Jana put her own money into the business bank account. Own money. Yeah, own money is nothing but capital. Capital. So Jana has put her own money into the account. So money is coming in back. So money is coming in back. So and what do this is first. So it is on first also. First. So money is coming in back.
Balancing the accounts. Okay. So Jana's business had opening balances and
we have to here. Next, models for resale or rate from the purchases. Purchases. purchases account debit, their account credit, their account credit. So again this here right there. Again this here right purchases. So entries. Next, paid trade by debit card. So debit card is obviously money will go from bank. So debit card is linked to bank account. So that's why money will go from bank. So we consider it as a bank accounts. Rent 1,000, debit card, bank, rent and bank. What date it is second. Money has gone from bank. Okay, so rent amount, money has gone from bank. So we can compare. So next, so we have recorded the opposite side in rent. So rent amount. So this is bank. So rent amount is an expense. Nominal amount always debit. Sales are credit to issue. Sales and issue. Sales are credit to issue. Sales. What date? Fourth. Sales are credit to issue. Sales are credit to issue. 2000. Credit. Sales is always credit. So issue. So opposite side. Issue on credited. They are debiting it because we have sold the goods. Because yes, you the receipt account that receives. Yes, account receives. Debit account that receives. Next. So cash sales. So what is happening? Sales is happening and cash is happening. What date? Oh, cash sales is cash sales. Cash sales means money will come in cash. Sales. So we receive money in cash through sales. So sales account will be credited. Sales. Cash. Paid cash into bank account. Paid cash into bank. Paid. Fifth. Paid cash into. So cash to bank. Cash is coming in bank. Paid cash into bank. So it is coming in bank. Paid. Fifth. Cash is coming. Paid cash into bank means money is coming in bank, but no cash. So it is cash payment and bank receipt. paid their money over paycheck after deducting 5% cash discount. So whatever money you have to pay in the, so we have got 5,000, original 5,000, and we have to pay after deducting a discount of 5% on 6th we have to pay. So how much we have to pay? 5,000, 5% is 250. 4,750 we have to pay on 6th. So we have paid 4,750. Discount is 250. We have received discount of 250 on 6th. 6th. We have paid discount received is 250. Revenue is going from bank 4,007. So total we have paid nothing. So today we have paid on 6th. How we have paid? We have paid back 4,550. Discount received. This we have to transfer to discount. So discount received. Only about 6th. 6th. So we will get it. So next, paid for stationery by cash 30. Paid for stationery by cash 30 is what it is on 6th. Paid for stationery by cash. 6th. Stationery by cash. So money will go. Stationery. Stationery. So what you have to do? You have to get stationery here towards 6th. So through cash, we have get stationery. Cash stationery account is always debit, and we have to credit cash. So because cash is going on, debit stationery with 30, cash. Now we have to balance. What do we balance? So what is the most important account here is the cash. So basically what you do, you add all this. So 2,500 plus 8,000 plus 500 is 900 plus 10,000, and this side it is 1,000 plus 4,750. It is 5,750. 10,000 minus 5,750. So what you have to do? You have to write down in pencil here. Write down. You write down in pencil here. You write down in pencil. Here also you write down in pencil. So if you write down, you will get 5,750. Here you will get 10,000. So 10,000 minus 5,750 we subtract 1 from that. So 10,000 minus 1,000 minus 5,000 is 4,250. So what you have to do? 4,250 you would write here. 4,250 you would write here. So that total on both the sides becomes same. So this side is also 10,000. This side is also 10,000. And this is called balance carried on. So balance carried on. So this side also it is 1,700. Here it is 530. So 1,700. This side is heavier. You write down here 1,700. So here it is 530. 1,700 minus 530. 1,700 minus 530. 1,170. So you write down 1,170. So that the total on both the sides becoming. So this side is also same. This is how balancing is done. Okay. So now we have to do balancing only for capital accounts and trade accounts because they will be carried forward for the next accounting period. So capital account is equal to balance carried out. So this will be carried on, two balance carried on. So we become by balance model. So only the dates will change. So here it will be October 7th, here it will be October 8th. So balance then. So purchases account 5,000. So there is no need to balance. This is 5,000. You have to just this will directly go to trial balance. So they will here also 5,000, here also 5,000. So there is no question of balancing here because the total of both the sides are same. Rent account. This will be straight away go to trial balance. You have write this as it is. Sales 3,007. This will go to sales account directly to trial balance. So if you want, you can just write that again. So this will go to trial balance. Yes, account. So balance carried. Balance carried down is 3,000. So this will be brought down again. Balance. Brought down. So discount received is 250. This will straight away go to trial balance. Stationery is 330. 30 is straight away go to trial balance. So this is the end. This is what else we need to do in this. Balance the accounts at first and bring down the balances. Okay. Balances. This is how we have to do this balance. So okay. So we'll catch up in the next class. postal and stationery paid budget. Again, money is going out of that. So postal and stationery is an expense. So debit. Postal and stationery. Postage. So here, why? Because of this given. Telephone bill paid from the bank account by standing order. So whatever it is, whether it is standing order or so money will go out from the so yeah, heating and lighting will pay from the bank account by standing order. So heating and lighting, heating and lighting, so heating and lighting. Paid wages messages. So what is happening? Wages. By that. Rent received directly into the bank account. So what is happening? Your money is being received. So bank account will be because money is being received. Bank account rent received. Rent. So you specify because rent can be paid. See here rent is paid. So it is rent is received. So or you can write rent expense account or rental income account. So rent received also you can write or rent paid account also you can write. But you have to specify because rent paid is separate and rent received is different. So this is an expense. When paid rent is an expense. Okay. Whereas this is a revenue. So always we have to specify because we cannot mess up. So that is what is disclosure concept, which says that we have to disclose everything in detail. So paid bank interest received into the bank account. So what is happening? We are receiving money in bank and we are receiving interest. So interest received. So again, interest can be received also and paid also. So that is why we have to receive specify whether it is received or paid. Okay, so that's why we have to specify whether it is received or paid. So business owner takes money out of the bank account for personal expenses. So what is happening? Drawings is happening. Drawings. Money is going out from bank, right? But out of bank account. So loan received from a friend B. So what is happening? We are receiving loan from a friend. So all the transactions are assumed to bank. So like money is being received in bank account. So but who is giving it? It is Lee who is giving. So credit the giver, credit the account that gives. So it is the Lee who is giving. So Lee account. Bank account. So money is coming in bank and B is the person. B is the account that loan repayment made on loan from Lee. So what is happening? Lee, money is going out from bank, and who is receiving? Lee. Lee is receiving or giving. So Lee is receiving. When we pay the loan, Lee will receive. So Lee account will be debit because debit the account that receives. So P is specific. P here which account will be debited, which account will be very clear. So then purchases paid by debit card. So whether it is debit card or a check or whatever, always it is money will go from bank. So purchases for debit to bank. Because money will go out when you pay out from bank. Debit card obviously money will go out from bank only because unless you have money in bank, money cannot be debited by bank. Sold goods and bank debt expense. So what is happening here? Money is coming in bank. And what is happening? Sales. Sales is the revenue. Sales is the revenue. Sales is the credit. So credit or income in here is revenue. Return goods to supplier and bank the bill. So you are returning the goods to supplier. So supplier is receiving. So you will debit and money will go from bank because money is given away to bank. So refunded money to customer by check. carry or take it, right? So credit the receiver, debit the receiver, credit the receiver, debit no. Yes, but return goods to supplier and thank the refund. Thank the refund. We are receiving the refund. So what we have to do? We have to receive. We are receiving. So bank account will be taken. And we are returning goods to supplier. We have returned goods to supplier. So it is called purchase returns. It is called purchase returns. Correct? It is purchase return, not supply. It is not. It is not. It is purchase returns. Purchase. So refund money to customer by check for goods return. So it is this is sales. So when we have sold the goods, but we have received that. So it is exactly reverse of sales. Sales, sales return, and we will credit tangible money will go. So carriage inward purchase, whether it is carriage inward or carriage inward, we will always go from so carriage. We have to specify whether it is carriage inward or not. Carriage. So carriage outward. So carriage outward percentage. Whether it is carriage inward or outward, it is always specified. So money will always go from. So it will be refunded goods to supplier and thank the goods. So we are receiving and purchase returns. Purchase returns are opposite of purchases. Purchases are credit, right? Purchase returns are always credit. Okay. So this is how it is. So this is activity 1.2. So we'll continue in the next class. Students, welcome. So today we'll discuss practice questions for cash transactions. David operates with. So before seeing this, what you can do, just follow. You can try solving this question. So which of the following financial transactions is most likely to require a debit entry? What is debit entry in the bank book? What is being received? So what you'll receive, if you purchase, you'll not receive. When you rent receivable obviously you receive. So debit entry. Sales returns, you don't receive. Wages you don't receive. So what you receive. Amir bought goods for resale and paid for the goods to be delivered. Receipt receipt on this goods not converted to delivery goods to be. Amir bought goods for resale and paid for the goods to be delivered. Which entries in on this goods not the delivery goods to be. So I will go with paid to bank account. I will not go with this one. So then dear friends, welcome to Shasha's lecture class. So today we'll discuss TT 2.0. So this is David Hawkins' latest book. So we'll start. So below are the financial transactions for max business. Those are the transactions to the costs. All goods are bought and sold on credit. Okay, so all goods are bought and sold on credit. So basically, so no bank account is involved here. So other than other than cash, cash transactions, how to record credit transactions. This is credit transactions. So where no money is being received or paid. So it was easier there to find out. So it would have on one part, the other part would have been easy. But here, it looks somewhat it is somewhat complicated. So, but it's easy if you understand the main concept. What is the main concept? So, basically, we need to know the personal account. The personal account. So, whether this account is receiving or taking. So, we need to know this. So, purchase goods from Tina that cost 2,000. So, when we purchase goods from Tina, Tina is the account that gives, right? Tina is the account that gives. Tina is the account that gives. Tina gives. Okay, when we purchase, obviously Tina gives. So what you can do is you can try working on this question on your own. So then you can compare with the answer here. So first, let us make a list of accounts that are necessary. So we need to prepare Tina's account. So we need to prepare Tina's account. We need to prepare purchase account because goods are purchased from Tina, right? So purchase account, Tina account. So then sold goods to Ali. So sales account, Ali account, return goods to Tina. So return goods to Tina means we return only those goods which we have purchased. So it is purchase returns. Purchase returns. Then purchase goods from Lim. So Lim account. Purchase account is already there. So Lim account. Sold goods to Umar. Umar account. Because sales account is already there. Umar account. Return goods to Tina. Return goods to Tina. Purchase returns again. So Ali, all goods sold to Ali have been returned. So have been returned means we have received back. So it is sales returns. Sales. So basically we need to prepare 1, 2, 3, 4, 5, 6, 7, 8 ledger accounts. Basically we need to prepare 8 ledger accounts. So let us proceed. So let us start with purchase account. So purchase account. So always the ledger should be so always date should come. Always date. Don't miss to put the date and the currency. Date and the currency. Always. Okay, right, always that thing. So which account you are preparing? So purchase account. Purchase account is always an expense. So purchase account is always an expense. Always it will be debited. So see, this is how you have to remember, so that the logistics will be clear. So how much? What is the worth of goods you have purchased? And it is on October 1st, 2000. October 1st. So purchases. So purchases account debited with 2000. This is how this is what it means. So a lot of students, what they get confused, So they write something here, no? So the thing that if they have debited, no, it is not like that. Purchase account debit means purchase account is debited. With whom? From whom you have purchased? You have purchased from Tina. So Tina account. So Tina. So you have purchased from Tina. See, purchase account has been debited and Tina's account has been credited. So this is the completion of the entry. So we have to prepare Tina account. So how do you prepare Tina account? So this side is always debit, this side is always credit, always debit, you have to write always debit, always currency. So what is the amount? So Tina account will be credited. Tina account will be credited means you have to write here. So Tina account is credited. See, this is not. So a lot of students they get confused. Like, so Tina account credited means Tina account is credited with what? It is credited on October 1st because of purchase. So this is known as completion of double entry. This is known as completion of double entry. So here you have written 2000, here also you have written 2000. See, debit 2000, credit 2000. Obviously, debit is equal to credit, and one account is debited, other account is credited. So this is what is the first thing you learn in accounts, like what should be debited, other account will be credited. So this is very important. So next, coming to the next. Sold goods to Ali for $300. So sold goods to Ali. So now we have to prepare sales account and Ali account. Sales account. And Ali account. Sales account. So how much? What is the value? What is the date? Always remember to put the date. October 2nd. Payment. October 2nd. So this is always credit. This is always debit. How much? 300. See, sales is a revenue. Sales is always created. Rate on incomes and gains. Sale is always created. Sale account is created by Ali's account. So with a debit to Ali account. With a debit to Ali account. So this is what it means. So now Ali account will be debited. So what date? October 2nd. Ali account will be debited. So Ali account will be debited. So sales. So now one more thing. What is it? So now here you have to see what is Ali doing here. So what is Ali? When we sell goods to Ali, Ali is the account that receives. Ali receives, right? Ali receives. Ali receives. Debit the account that receives. That is what we learned in goods. So Ali receives. So that is why we have to debit. So debit the account that receives, credit the account that gives. So this is the main thing we should understand. So very important. Yeah, very important. So a lot of students they get confused with personal account. rest of the account they do easily. So nominal accounts expenses they write off as an expense. Income account they write off, revenue account they also write. Assets account debit what comes in credit what goes out that also they write. But in personal account they miss. They get confused. They think from the point of view of max business, but they try to think what max is doing. What max is doing, whether max is giving, max is receiving or something like that. No, actually, you have to see what Tina, who first position is in Tina. So Tina gives Ali receives. So this is what is very, very important. Okay, now what has been clear to you. So now it is everything is easy. So that the account the entry is complete. Next. So sales account is done, Ali's account is done. Now come to the next one. What is the next entry? Return goods to Tina that had cost. So now you have returned goods to Tina. So here what is happening to Tina? Tina is receiving. Here Tina receives. So Tina account will be debited. Debited with 200. Tina account will be debited. Tina account will be debited with 200. On what date? Tina account will be debited with 200. On what date? On 4th October. So October 4, Tina account is debited with 400. So, but why are we debiting Tina? Because we have returned the goods to her. So, purchase returns. Purchase returns. So, purchase returns. We have to open an account called purchase returns. This is debit. This is credit. This is dollars. This is dollars. So purchase returns. So purchases is always a debit. So purchase returns is exactly reverse of that. It is always a credit. So what is the amount to right? We have to credit. This is how we work. There are so many ways of removing things. So why? Because it is on October 4th and Tina's account. Tina's account. We have to credit purchase returns 200 with the debit to Tina. This is how we have to read and we have to understand accounts. Very important. So that the logical flow of concepts is very, very clear. Okay. So very, very clear. Logical flow of concepts is very clear. Now next. Purchase goods from link that cost 2400. So link is another person. So again, what is the link doing? When you purchase from link, obviously link gives. When you purchase from link gives. So that's why we have to credit link. We have to credit link. And purchases is an expense. We have to debit purchases. Purchases account is already there. So we have to just write there. Purchases account is already there. We have to write there before it. What date? Date is very important. 8. So you are right. So purchase account is debited with link. Purchase account is debited with the into link, and link account will be credited. What is link account? You have to prepare link account. October So why are we creating link? Because we purchase from. Understood? This is how it is. This is how we have to understand the concepts. Very clear, very clear. Now it should be crystal clear. Now let us move it forward. So then, sold goods to owner for 1100. Sold goods to owner. So when we sell, obviously owner will receive. So owner is the receiver. Account owner receives. Owner receives. So owner receives. So owner account will be debited. Debit the account that receives, right? So owner account will be debited and sales account will be credited. Sales account is already there. So we have to prepare owner account and we have to write in sales. So owner account and sales account. Owner account. Owner account. So owner account will be debited. Why? Because he is receiving 1100. What date? 9th. October 9th. 1100. October 9th. 1100. Owner account is debited. Why? Because we have sold it. Sales. Sales. Owner account is debited with sales 1100. So now owner account is debited, sales account is already there. So a sales account we have to write now. We have to write it in sales. Owner account, October 8. Owner account, 1100. Is it clear? So this is how it is. Okay. So next. Return goods to Tina that had cost 100. So we have returned goods to Tina. Okay, we have returned goods to Tina. So return goods to Tina means Tina will receive. Account Tina receives. So when she receives, her account will be debited. So Tina receives. Return goods to Tina. So it is again we have to return. So it is purchase returns. Purchase returns to Tina 100. So and it is on 10. Purchase returns Tina 100. Purchase returns Tina. Purchase returns Tina. Tina. Where is Tina? Purchase returns Tina. Why we have debited? Purchase returns. So next. All goods sold to Ali have been returned. So all goods sold to Ali have been returned. So we have sold it. So when we get back, so it is known as sales returns. So Ali have been returned. So we have returned to Ali. Obviously, all goods sold to Ali, Ali has returned. So we have sold to Ali, Ali has returned. Ali is the giver here. So credit the giver. So we have to Ali gives us back. Ali gives us back. We had sold him. At that time we had given him. Now he will give us back. So all goods sold to Ali have been returned. So whatever we have sold to Ali 11th, sales returns and Ali. Sales returns and Ali. So we have to credit him. So we have to credit Ali because he is the giver, is the giver. Credit the giver is the giver of the goods. So October 11th. Why are we crediting? Because of sales returns. So now sales returns. Sales returns. Sales returns. So sales returns. Sales is always a credit. Sales returns is exactly because of that. It is always a debit. So here the amount will be here and the lead, and it is on 11th October 11th. And what is the amount? Go to again 300. You are correct. Ali 300, sales returns 300. So there's no more. So he has written everything. So sales returns account 300 debit. Sales return account will be debited with release account 300. So this is how it is. Okay. So next, this is activity 2. So now what you can do, you can try working out activity 2.2. So below are the financial transactions for friends business. Post the transactions to the ledger account. All goods are bought and sold on credit. Bought goods from ting that cost 5,000 less trade discount of 15%. So the sold goods will be for 1,000. So the return goods costing 500 less discount to ting. So purchase from B that cost 4,800 trade discount before trade discount of 20%. Paid ting all money loaded. Paid B for goods ordered 15 November. Received full payment from B. So what you can do, you can try working on this question on your own. And in the next class, you can cross check with the solution. So we will discuss this again in the next class. So till then, have a good day. Dear students, welcome back to Shastra's virtual classroom. So this is activity 2.2, credit transactions, from credit transactions, and this is David Hopkins' latest book. So below are the financial transactions for Peng's business. So these are the books of Peng's business. Penge or Pen, whatever. So business post the transactions to the ledger accounts. Okay, so post the transaction to the ledger accounts. All goods are bought and sold on credit. So no cash payments, no bank payments again. So all goods are bought and sold on credit. So date is number first. So let us make a list of ledger accounts that we may have to create. So bought goods from ting. So purchases account and ting account. Purchases account, hinge account, hinge account. So cost 5,000 less trade discount. So should we create trade discount? Should we create trade discount? No, never. Okay. So we should never create trade discount, and because trade discount is never shown, but the transaction is shown at the net of trade discount. So 5,000 minus 15%, 5,000 15% of 5,000 is 750. So 4,250. The transaction will be shown at 4,250. So purchases account, hinge account, sold goods to Lee for 1,000. So sales account, Lee account. So then sales account, Lee account, 1,000. So return goods costing 500 less trade discount to Tinge. So again you are returning the goods. This is return goods. So you are returning to Tinge. So who is Tinge? So it is he is a supplier. So we are returning goods. So returning means those goods only which we have purchased will be returned. So these are purchase returns. So purchase returns. So purchase returns, so should be less 5% trade discount. So 515 is a 45. So 45, 515 is a 45 means 15% of this. 45, so 4 and then 65. 65 or 55? 55. Correct, no? 5, 15 is a 45. So 55. 55. Okay. So purchase goods from V. So again purchases. Purchase account is already there. So V. So cost 4800 less trade discount of 20%. So this should be recorded at 4800 minus 20%. So 4800 minus 20% is so 48. 3840. So 3840. So you have to record it at 3800. So then, so paying all money owed. So whatever money you are owed, you have to pay to, you have paid to Ting. So paid way for goods bought on 15th November. So you already paid way also. So which account will be there? Bank account. We have to write bank account. We have to open bank account also. Received full payment from Lay. So that will also be recorded in bank account. So how many accounts should we open? One, one, two, three, 4, 5, 6, 7. We have to open 7 accounts. So first, you bought goods from Tinge that cost 5,000. So first you prepare purchases account. Purchases account. So purchases account. So this side is always debit. This side is always credit. So purchases account will be debited with 4250, 4250. Because purchases is an expense. So expense account is always debited 4250. So date always you write the dollars amount, you have to always write, don't forget to write the dollars. And what is the date? November 1. And it is sold to, it is bought from Tinge. So November 1. So see purchases account debit to Tinge. Okay, so we have to complete the entry by writing it to Tinge account. Tinge account. So Tinge account will be credited. Why? Because he is the giver. When you purchase, Tinge gives. So his account will be credited. Why? Because we have purchased from him. Okay, so this is how we have to write. Next.
is complete. So the entry is complete. Purchases account will be debited with change. Change account will be credited with purchases. So next, sold goods to leave for 1000. So goods to leave, sales and the sales account. Sales account and the account. So how much is sales sold goods to leave for 1000 and November 5th. November 5th. November 5th. 1000 credit to sales because sales is an income. So credit all incomes and gains. So 5th. So leave because leave is the receiver of goods. So this side is always debit. This side is always credit by default. This is always debit. This side is always debit. This side is always credit by default. So dollar November 5th. So 1000. Why are we debiting the Lee? Because we have sold him sales. So we have sold him. So debit credit. Sales account will be created because it's an income. Lee account will be debited because he is the receiver of the goods. Okay. Then comes next. Next. Return goods costing 500 less discounted 10. So we are returning the goods worth 500, but after discount it is 455. So return to goods means these are purchase returns. Hinge account is already there. Purchase returns, hinge. So purchase returns. So purchase returns account. Purchase returns account. So what is the value? 455. So purchase returns. Purchases is a debit. So it is always debit balance. Purchase returns is reverse of purchases. So it's a credit. So 455. So what date? When we have returned? We have returned on 10th. November 10. November 10 we have returned. November 10. So why? To whom we have returned? We have returned to Hinge. We have returned to Tinge. So Hinge. So what we have to do? We have to debit Tinge. Now we have credited purchase returns. Now we have to debit Tinge. Tinge we have to debit. So purchase returns. So November 10. November 10. November 10. Purchase returns. We have to debit Tinge. 4 and 50. Always write the dollars. Don't forget. So purchase returns. So purchase goods from V that cost 4800. So 3840. So purchase and V, and it is on 15th. 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 November 15th. Purchases account will be debited. 3,840, 3,840. So purchase account will be debited 3,840. We have purchased from way. Okay, so that's why we have to write way here. So we have purchased from way. So purchases account will be debited. Now we have to write into V account. We have to open, if it is not there, we have to open V account. So when we purchase, we would have given us the goods. So November 15th, November 15th, 3,840. So why we are crediting V? Because we have purchased. Because we have purchased. Purchases account. We have to credit V with purchases 3,840. So now coming back again, next entry. So always write the dates. Next entry. Paid tinge all money owed. Paid V for goods bought on 15th November. So we have bought only once. So we have to pay tinge. We have to pay V, and we have to receive from V. So receive. 20th we have paid to tinge and V. 20th we have to pay. We have to pay to tinge and V. So bank account. Assume that all entries are made in bank, or you can write cash account also. So we have to pay to pinch and pinch. How much we have to pay to pinch? Obviously the balance. When we have paid on November 20. November 20. So November 20 we have paid. So bank. So we have paid how much? 4250 minus 455. 4250 minus 455. So it is 3795. So we have to pay 3795 to tinge. So we have paid 3795 to tinge. Complete the entry. Complete the entry. How we complete the entry? So we have to write in bank account. Bank account. So November 20. So we have paid to tinge. We have paid 3,795. So we have to pay to another person. We have to pay to V. We have to pay to V. So let us see. We have to pay to V. We how much we have purchased? We have purchased 3,840. So obviously we have to pay him 3,840, and it is on November 20th. November 20th we have to pay him. So 3,840 we have to pay. So what account will be debited? Bank account will be credited. V account will be debited. Why? Because V is the receiver. When we pay, he receives. So now bank account will be credited. Why? Because money is going out. So V given away. Cash is given away. Money is given away 3,840. So next, what is there? Next, received full payment from Lee. Received full payment from Lee. So we have received full payment from Lee. So let us see how much we have to receive from Lee. So we have to receive 1,000 from Lee. So we have received, what date we have received? We have received on November 25th. November 25th we have received 1,000. So obviously we would have received from bank account. So you can write bank or cash also. So by default we are assuming that we have received through bank. So that is assumption. So bank. So November So from Lee, right? Lee, Lee 1000, 1000 from Lee we received. Okay, that's all. So we have finished. What else is required? Below are the financial transactions for bank's business. Post the transactions to the ledger accounts. All goods are bought and sold on credit. So we have finished. So this is the answer. So you can, so basically what you can do is you can try answering yourself. Then you can compare checking with the answer here so that you are confident that everything is right. So purchases account will be debited. So these are the amount of purchases. So tinge account, in the account we have paid everything, so there is no amount left over. Sales account is created. So then Lee account is debited and credited because we have sold and we have received also. Next, purchase returns 455. Way account, we have purchased, we have paid. So bank account, we have paid, we have received. So that is the end. So activity 2.2 is done. So dear friends, welcome back to Shasha's virtual classroom. So this is activity 2.3. So let us discuss this problem. So complete the entries for the following table. What you can do, you can just try answering yourself and then you can compare with the solution here. Sold goods to Dia on credit. So complete the entries for the following table. Name of account to debit, name of account to credit. So sell goods to Dia on credit. So sale account will be created. Sale account will be created. Dia account will be debited. Why? Because sale is an income, credit or income semblance, and Dia is the receiver of the goods. When we sell, Dia has received the goods. So Dia is the receiver of the goods. Dia account will be debited. Buy machinery for use by business on credit from Jones Limited. So since you are buying business machinery for use by the business, so machinery account, machine is coming in asset account. So real account debit what comes in. So machine account, machine is coming in, and who is the giver? Who is the giver of the machine? Joint Limited is the giver of the machine. Joint Limited. So then purchase goods on credit from Allen Trade, discount received. So we have purchased goods on credit from Allen. So whether it is cash purchase or credit purchase, purchases are always purchases. So you can write purchases, and we have taken Allen is the giver of the goods, and that's all. So discount received will never be recorded because this is trade discount. Trade discount is never recorded. So net of amount will be recorded. Return goods bought on credit to Allen. Return goods bought on credit to Allen. So whatever goods we had purchased, we are returning it back. So these are what purchase returns. So purchase returns are exactly reverse of purchases. So exactly reverse of purchases means purchase returns. So when we return the goods, Allen will receive. So debit the receiver, debit the account that receives, Allen receives. So bought goods on credit returned by Dia. So goods bought on credit returned by Dia. So what has happened? We have sold goods to Dia on credit. So we are receiving that. So sales, opposite of that is sales return. So we have to credit Dia because Dia is the giver of the goods. Dia has returned the goods. Return goods to a supplier and bank refund. So what has happened? We have returned the goods and we have received the money. So bank money will come in bank account. So bank account. So return goods to supplier. So some supplier. So they have not mentioned the name. So we can just write return goods to a supplier. So it is purchase returns. Exactly reverse of purchases. So purchase returns. So because of purchase returns, we have received money. We have deposited in bank. So refund money to customer by check for goods returned. So now we have to give the money back. Some customer has given us money, so he has given us back the goods. So it is sales returns. Sales returns. So now pay joint limited for goods bought. So money will go out, bank account. Money will go out. So we will receive joint limited goods. Receive full payment from DER less cash discount. So we have received payment from DER. Receive full payment from DER. So we have received money in bank, and we have given discount also. Discount allowed also because we have allowed discount. Discount allowed is a loss. So even that. So and we have to credit DER because she is the giver of. So pay Alan for goods bought less cash discount. So here we have to pay Alan. Alan is the receiver of money, so Alan account will be debited. So we are paying. So money will go from bank, and discount received is again discount received. So the amount we are not going to pay because of discount, so that is gain. So discount received is a gain. So these are the entries. So what you can do normally. So this is the this is also this is activity 4.3 David Hopkins the latest book. So, dear friends, welcome back to Shasha's virtual classroom. This is practice questions from David Hopkins lesson number 2, credit transactions. So which of the following transactions, so before attempting this, before having a look at these answers, you can try answering yourself and you can just cross check with our solutions with the discussion. So always get back to me in case you have any doubts by way of commenting the below the. So which of the following transactions is most likely to require a credit entry in the bank account? So credit entry in the bank account is nothing but payment. Okay. So which of the following transactions is most likely to require credit entry in the bank account? Cash discount. Cash discount will not come because money doesn't go or coming. Cash sales, money doesn't go or coming. Payment to a customer. So when we pay, obviously money is paid. This money is credited. So bank account is credited because payment by a customer. So I see this is payment by a customer. Payment by a customer means we will receive, we will not pay. So payment to a supplier. Yes, payment to a supplier. Something we pay, so money goes out. This is the answer. So Joe's bought goods on credit from Maria for rupees 200 less trade discount of 50. So Maria bought goods on credit from Maria. So Joe's bought goods on credit from Maria. So Joe's bought goods. Okay, Joe's bought goods on credit from Maria for 200 less trade discount of 30. So 170. So transaction will be recorded at 170. Which entries record this transaction in the Joe's books? So for Joe's has bought, right? So it is a purchase for Joe's. It is a purchase. So we have to be careful in seeing, analyzing. So what Joe's bought, no? So is a purchase. It is a purchase for Joe's, and it is in Joe's books means it is purchase. While Maria's books it's a sale, but in Joe's books it's a purchase. So be careful. So purchases. So purchases will be debited 170. So Maria will be credited 170. So discount is never recorded. This will never come. It will never be recorded at gross 200. Never at 200. Never at 200. Never at 200. So this is the only correct entry. So purchases account 170. Maria account 170. This is the right answer. Okay. So next. So next, Myra sold goods on credit to Zara on 1st July. Myra sold goods. Okay, Myra sold goods to Zara on credit to Zara on 1st July. The goods are priced at 1000, but Myra allowed Zara a trade discount of 10%. So they will be recorded at 900. Okay, and offer a cash discount of 2%. So will be recorded at 900. So cash discount of 2% is nothing but 18 bucks. So this will be recorded, this will be recorded. She pays within 7 days. So now which entries record his transaction in Myra's books? So Myra has sold. So sales entry will be recorded. Myra has sold, sales entry will be recorded. Sales entry will be recorded. Okay. So it will be recorded at 900. Yes. Zara will receive. Zara will pay 882 and discount allowed is 18. So this is the entry. So it cannot be this, it cannot be this, it cannot be this. So this is the entry. So three things will be affected. So 882. So this is the entry, not this, not this, not this. These are exam style questions, and this type of questions will come in AS. Okay, so be careful. So try to understand, be clear in analyzing the question and write the correct answer. So below are financial transactions for Rachel's business. Post all the transactions to ledger accounts. All goods were purchased on credit. So this is a ledger book. So you can try answering this. Suppose you have any doubts, you can get back to me. So as a comment in the below this video. So we'll catch up in the next class with a new lesson. So till then, have a good day. Dear friends, welcome back to Shaza's virtual classroom. This is activity 3.1 from subsidiary books. So books of prime entry. Okay. So subsidiary books are books of prime entry. So these are known as books of prime entry. So books of prime entry. So Junior had the following credit purchases. Junior is the name of the trader. So Junior had the following credit purchases and purchase returns. Credit purchases, purchase returns during the first 10 days of November. So first November purchase goods from Cora for 10,000 credit discount. Okay. So purchase goods from Cora for 10,000 less trade discount of 20%. So this will be recorded at 8,000. So this will be recorded at 8,000. So Cora allowed a 5% cash discount for payment within 10 days. So 5% cash discount means, so 5% of this is 400. So then purchase goods from frame 14,000 allowed 2% cash discount. So there is no trade discount, only cash discount is there. So it will be recorded at 14,000. And cash discount will be allowed at the time of making payment. So 2% of this is 280. Return goods to Cora cost 400 less 10% less trade discount. So Cora, so you have sold to Cora at a discount of 20%. So you are receiving back 400. So 400 minus 20% is 4 to the 8. So 80, 320. So it will be recorded at 340. Purchase goods from Cora for 16,000 less trade discount of 20%. So this will be recorded at 16,000 minus 20%. 12,800. we recorded 12,800. So cash discount is 5%. 640. Send checks in full settlement of their accounts to Cora and Prem. So payment has been made. So enter the transactions of for November in Junior's books of prime entry. So what are the books of prime entry in this instant case? The books of prime entry are purchase, purchase journal, the record all purchases, individual purchases, and purchase returns journal, purchase returns journal, the record all purchase returns, and cash book, cash book. So record cash payments, cash payments, and discount. So cash book for payments and discount, cash discount. So three books we have to write: purchase journal, purchase returns journal, cash book. So these are the books of prime entry, three books of prime entry, and post them to the ledger, ledger accounts. So how many ledger accounts are there? So purchases, purchase account. Remember, purchase account is different, purchase journal is different. So purchase returns journal, purchase returns account. So then Cora account, Prem account, Prem account, discount received account, so these are the ledger accounts we need to prepare: 1, 2, 3, 4, 5, 6. So we have to prepare 6 ledger accounts. So the problem looks very small, but these are all procedural things which you need to know. So to learn comprehensive accounting practices so that everything is clear. So because see, future problems, I mean future lessons will be based out of this. So unless the understanding is clear on this, you will not understand the future concepts. So that is why you should never sort to shortcuts in. So what most of the students they try to adopt shortcuts. They try to score very high only by practicing near the exams. So which happens very rarely, and it is not advisable to do that. So it is always for you to learn from day one, so that you are perfect in everything. Every understanding, each and every understanding should be clear. It should be very clear. Okay. So now we'll start with this. So if you have already learned in school, you can try working out this question on your own, and then you can cross check with the solution here. So this is how we are going to proceed. Okay. So first we need to prepare purchase journal, purchase returns journal. Okay. So let us first prepare purchase journal. Purchase journal. So what all will come? Date will come. Name of the supplier, because we purchase from supplier. Name of the supplier. Invoice number. Amount. Dollars. Okay. So first, what is the date? So we have purchased on 1st November. November 1 we have purchased. So So we have purchased from Cora. We have purchased from Cora. Invoice number is given. Invoice number is not given, so don't worry. So it should be recorded at 8,000. See, remember always paid discount is never recorded, never shown anywhere. So it will always be recorded at net amount. So 8,000. It will be recorded at 8,000. Invoice number is not given, so it will be recorded at 8,000. Next, purchase goods from paying. Again, purchase goods from paying. So again, goods from paying, that is on 2nd November. So 2nd November from paying. So the amount is 14,000. Amount is 14,000. Next, again you have purchased goods from Cora for 16,000. So get rate discount of 20%. Again from Cora, what date? It is on 5th November. Purchased on 5th November from Cora. So how much? What is the amount? 12,800. So what is the total purchases? So 8 plus 14, 22, 22, 34, 800. So these are the total purchases. This is purchase journal. Now we need to record, prepare purchase returns journal. Purchase returns journal. So what is the date again here? You have to write the date. You have to write name of the supplier. So what date? Return goods on 4th November. So November 4. So what is the amount? 320. So from home we have written Cora. And we have received credit note. See, remember one thing. So when we are writing the purchase journal, we are recording individual. Okay, so we are recording individual entries. See, very important. Okay, so this way you will remember this again when you will remember when you are preparing control accounts, when you are reconciling control accounts. At this time, at that time you may need this knowledge. So at that time you may need this knowledge, because this is the logistics you have to understand. This is the logistics you have to understand, and this thing you have to keep in mind when you are doing control accounts, lesson of control accounts. So these are all interrelated. Okay, so this is how it is. Then next, what is the next prime entry? Book book of prime into cash book. So cash book. So we have to prepare cash book. So cash book what all will come? Discount column will come. Since we'll be paying so this side is always credit, this side is always debit. And so this is discount column. This is discount. This is cash. Cash column. So it is in dollars. This is also in dollars. So here next first what is happening here? So we have purchased no cash transaction, no cash transaction, no cash transaction, no cash transaction. Check send checks in full settlement of their account to Cora and Prem. So we have paid to Cora and Prem. So we have paid to Cora. Cora. But here we need to calculate. So we need to calculate because Cora, what are the transactions you have done with Cora? Cora you have purchased, you have returned, again you have purchased, 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 returned, purchased, purchased, returned. So 8,000 plus 4,800 minus how much you have returned? You have returned 320 or 320. So this gives 8,000 plus 4,800 minus 320. You have to pay 20,480. You have to pay 20,480. But what is the discount? So discount. Discount 400. But you already pay. You have returned goods for 320. So what is the discount you will receive here in this case? In this case, the discount is so the discount is cash discount is on the net purchases. So 8,000 is the purchase. 8,000 is the first purchase. Then second purchase is 4,800 and there is a return of 320. So purchase, purchase, return. So net purchase is 20,480 and discount is 5%. So be careful. You have to see sometimes the rate of trade cash discount will be different. So in this case, here also it's 5% cash discount. Here also it's 5% cash discount. So there is no variance and it will be the same. That's why you can take 5% cash discount on this. So you will have to pay 20,480. On that 5% will be 1024. 1024. So how much you have to pay? You have to pay 19,456. 14,456. So to claim, how much you have to pay? Claim, so the entire amount you have to pay. So claim is 14,000. Discount is 280. Discount is 280. 14,000. Claim 14,000. Minus 280. 13,720. So you have to pay 13,720. So this is the amount you have paid to claim. So what date you have paid? So date is very important. Don't forget to write the date. The payment is made on 9th November. So November. So you have made the payment on November 9th. So this is the cash book. This is how you have to receive record. So discount column 1024, claim 280. So cash. So this is done. So cash account is done. So now we have to prepare the ledger accounts. Okay. So now we have to prepare the ledger accounts. So what are the various ledger accounts we need to prepare? Okay. So now we have to prepare ledger accounts. So purchase account is the first. So first we prepare purchase account. So we have to post all the transactions at 10th November. So what we have to do, 10th November. So November 10th. So what is the date? What is the amount of purchases? Total purchases. We have already done purchases, right? So what is the total purchase? We have already prepared purchase register. I mean purchase journal we have prepared. So 34,800. So we have to prepare 34,800. So you have to write 34,800. 34,800 purchase. See, this logistics is very important. So when you're doing control accounts at this time, you will come to know. So you may have to reconcile. So many. It's very important topic, often asked in the exam. So you have to be very careful. You have to be 100% clear on this concept. So when we prepare purchase journal, we record individual entries, but when we enter it in purchases account, we record the total of that. Okay. Similarly, purchase returns. Purchase returns is exactly reverse of that. So November 10, purchase returns journal. So what is it? 320. So now we have to prepare other accounts like Cora account. So we have purchased from Cora. So Cora's account will be credited. So always write the amount. Always write the amount. Cora account. So Cora account will be credited. So what date when we have purchased? So we can see from here itself. Cora we have purchased on 1st and 5th. 1st and 5th. first it is 8,000, and fifth it is 4,800. So this is purchases, purchase, this is purchase. Remember, you are writing purchase here, not purchase. Okay, purchase, purchase, 8,000, purchase, 4,800. So here this side, so it will be, so this is number. Because purchase journal, it is a journal. Okay, so purchase journal, so this is core ledger account. So now next, what is it? So what did you return? You return your fourth number. So how much? 320 is 320. So next, frame account. So how much is frame account? So frame account is 14,000. So frame account is 14,000. So this is on what date? This is on 2nd November. Purchases. Okay. So now come to discount receipt. So again, discount receipt is again. So discount receipt is again. So it will be created. So individually you have to write, or you can write the total. So so discount receipt is 1304, 13,004. So we have to record that discount receipt 13,004. So number 10. So cash book. So we have to write here, that's all. So 1,304, not 13,004, 1,304. So that's also discount receipt. So what else is there? So so I told 6 ledger accounts. So the last ledger account is cash book. So remember, cash book is book of both the book of prime entry and book ledger also. So cash book is both book of prime entry and ledger. So no more, it is not required since we are already prepared. So that's all. So that's the end of this particular question. See, such a small question, but it took considerable amount of time for you to understand. So prepare, post it to the ledger, understand the various concepts. So understanding various concepts is very, very important prerequisite for you to score good marks. So welcome back, dear friends. Welcome back to Shasha's virtual classroom. So today we'll discuss exercise activity 3.2. So enter the following transaction in the books of in lease cash book. So we'll learn how to prepare cash book. So I think you might have understood this. This is very easy topic, but some students may be confused, a bit confused. So let us discuss. So what you can do is before trying having a look at my looking at this particular session, you can just try working out the your own, so that your understanding is clear. So always try to work out on your own and then compare the answers, so that the understanding is clear. Okay. So basically, I would like to let you know that this is a format. Particular, you have to write this in a particular format, or particular, what do you say, in a particular style. So you cannot write it as however you want. So that style is this. So you have to write it in this way. So cash book. So this side is debit and this side is credit. So this side you have to write date, whatever details are there. Then discount. This is one column. So this is one column. So this is another column, and this is another column, and between, so there should be one line. So again, similarly this side also there is one column, another column, date, one column. So this is date, one column, date. So details, particulars, then discount received, one column, cash, one column, and one column, and the currency, of course, whether dollars or pounds or whatever. So we have to write here. Okay. So this is how it is. So we have to write this in this particular format. First you write the format. So this side cash book. So this side is debit, this side is credit. So the date, whatever your particulars. So first you write this till here. So copy, you have to write as it is. This way you have to write. Then we will start working out this question. Okay. So this is the question. So enter the following transaction in lease cash book. April 1st, cash sales 1000. April 1st. April 1st. Okay, so one more thing. So whatever we receive, we have right here. So all that is received, we have right here, and whatever we pay, we have right here. Okay, so in other words, if it is debit, so cash book is a real account, cash account is a real account, debit what comes in. So when we sell, cash comes in. When we sell, cash comes in, and it is cash. And it is cash. Cash sales 1000, cash is coming in. So cash column 1000, cash is coming in, debit cash. This is cash account. Okay, so cash book, this is cash account, this is bank account, this is discount account. So this is discount account, so this is discount allowed. So this is discount allowed, discount. So this is discount received, sorry, this is received. So it's a credit, no, it is received. So this is discount allowed, allowed discount. So allowed discount. So remember, this is allowed. Okay, so this side, because when we pay at the time we receive discount, no, we receive, so it's a credit. So but when we receive, at that time we allow discount, so it's a loss. So we write here. So cash account sales 1000, sales account 1000. So we write here. So we receive cash upon sale, we write here. So all whatever we receive, we have to write here. Whatever we pay, you have to write here. So this is just for you to remember. This is just for you to remember. So don't write like this. So let us see if they are writing this way. See, they are not writing whether it is receipt or paid. So here they are also discount received, they are written. Okay, so discount allowed. So here if they are not written whether it is received. So this is just for you to remember. So just for you, so that you understand, it is easy for you. Okay, so don't write this. So don't write. This is for you, just for you to remember. So don't write. Okay, so don't write. So receive cash. When we sell, we receive. So then what is the next one? So electricity charges, electricity paid in cash, payment. So we are paying. So credit what goes out. So credit what goes out. Cash account is a, so cash account credit what goes out. So what date? So it is on second, April 2nd. So second. So credit what goes out? Electricity. How much? 100. Cash. Credit what goes out? Cash has gone out. Credit what goes out. So next step. So we received, we have paid 100. So credit cash account will be credited and electricity charges will be debited. So next, cash sales 800. So we are receiving cash again. So what date it is? It is on third. 800. On third sales 800. We receive, when we sell we receive, no? So receive. So 800. Next, banked cash. So what do you mean by banked cash? We are taking out cash and putting into bank. So what is the entry when we bank cash? So very important. Okay, so this students often get confused with this entry. Students often get confused with this entry. For that, what you do, you just remember the entry first. Okay, so this is the easy way. Bank cash. Bank the cash means you are depositing money in bank. So bank account will be debited. Bank account will be debited. Cash account will be credited. Cash account will be credited. So bank the cash means we are depositing cash into bank. Cash is going out. Cash is going out, and money is coming in bank. Banked cash. So money is coming in bank. Banked. Banked. Okay. So money is coming in bank. Money is coming in bank. So this is bank. So money is coming in here. So how much? 1400. 1400. So money is coming in bank. Banked cash. So but cash is going out. Cash will go out. So cash will go out. What date? 4th. 4th. Bank cash. So remember, always you have to write like this. Okay. So my banked cash. So remember, don't get confused. So bank account will be debited. Bank account will be debited. Banked cash and cash account will be credited because cash is going out, money is coming in bank. So against this, what you have to do here, you have to write bank. Against this, you have to write bank, and against this, you have to write cash. And this is called contra. So you have to write it as C here, contra. Contra means it is affecting both the cash account and bank account on the opposite sides. So this entry will go where nowhere, but only affected in the cash book and bank book. So the cash account and bank account. That's why it's called contra entry. Contra entry means money is going out from cash and coming into bank. So remember, when you're writing in bank column, here it should be cash. So see here, bank column, here it is cash. So similarly here also, here it is cash column, but here it is bank. So be careful. Okay, so a lot of students they commit mistake, they get confused with this. So the concept should be clear. So understand this. So what is happening? So cash is going out and money is coming in bank. Simple. That's all. Okay. So then stationery paid in cash. So stationery paid in cash means you are making the payment stationery. What date? It is on 5th. 5th. Stationery. How much? 20 bucks. So 20. So we drew 900 from bank for cash float. So we are taking out money from bank. Okay, we drew 900 from bank. Be careful. So now money is going out from bank and money is coming in cash. This is exactly opposite of this. So we drew 900 from bank. So money is going out from bank and coming in cash. So the entry is exactly reverse of this. So what is happening? Money is going out from bank and coming in cash. Cash, cash is increasing, money is decreasing in bank account. So remember, okay, cash account will be debited, cash account will be debited, and bank account will be credited. So understand, this is very important. Lot of students commit mistake here also, so they get confused. Understand this. This is very important. Withdrew 900 from bank for cash float. Cash float means to keep in office. To keep in office for cash expenses. So that is the meaning. Okay, to keep in office for cash expenses. So we have to record rupees withdrew 900 from bank for cash. So money will go out from bank and come in cash. So money will go out from bank. Okay, how much? 900. What at 6th? On 6th, what is happening? Money is coming in cash and going out from bank. First you write in bank column, okay, then you write in cash column, or you write in cash column and then you write in bank column. First you write this, then you write the date. Date is very important. So then against this, so what is happening? Money has gone out from bank. So this is payment, right? So money has gone out from bank. So against this, here you have to write cash, and this is called contra again. So again, this is value here. Here you have written in cash column. So here you have to write bank. So this is in cash column. In cash column. But you are here again this you have to write bank. So be careful. So again this you have to write again contra. Why? Because it is hitting cash on account and bank on the on another account. Same. So very careful. Okay. So a lot of students commit mistake here. So this is very important. This is very important. This is very important. Contra entries are very important because lot of students commit mistake here. And cash book problem is very important in the AS level. So because it's very important, often asked. Okay. So very important. So at least in tests, internal tests and all, it is often asked. So a lot of questions are based out of this. So even bank reconciliation statement is based on this. So that's why the concept should be very crystal clear for you. Okay, so the concept should be very clear. So this is the end. So they are not asked to balance. So if you want to balance, how you balance? So you add here. So we have total here. So we total here. So whatever balance is there, balance carry down. So this side here cash. So balance carry down. So what is the balance? So here this side 1400. Here it is 900. So 1400 minus 900 is 500. So we write here 500. So here 1800, 1800 plus 900. So 19 plus 8, 27. 27 minus 27 minus 1500. 2700 minus 500. So this will be 1800 1180. So here it will be 1180. So now the total on this side, out of this side, out of this side, out of this side, out of this side should be same. So here it is 1400. So here it is 2700. This is 1180. 2700. So here it is 1400. So here it is 2700. Restore here. Okay. So this is how it is. So, 180. If you add all this should be 2700. So in other words, when you are balancing, so both the sides should be same. Okay, so here balance brought down. So balance brought down. Whatever is slide down here will be brought down. So 1180. So this will be 500. So this is how it is. So end. So this is the end of this activity 3.2. Okay. So let's catch up in the next class. Till then, have a good day. So dear friends, welcome back to Shasha's virtual classroom, activity 3.3. So let's discuss activity 3.3. Prepare journal entries for each of the following items. Okay. So what you can do is you can before having a look at this solution, you can just try working out the question on your own, and then you can compare with the solution. So if you have any doubts, if you have any concerns, you can just leave a message in the comment section. So I will be glad to help you. Okay, so prepare journal entries for each of the following items. So first one, purchase motor vehicle for use in the business from Paul, which cost 40,000. This is very simple journal entry. So what is there in this? So first one, so we'll just write here. So first one, first one. So what is happening here? We are purchasing motor vehicle for use in the business. Okay, so very important thing, we are purchasing motor vehicle for use. Suppose we purchase motor vehicle for sale, for use as merchandise in the business, then it becomes purchases. But when we use motor vehicle, it will be recorded as an asset. So why it has come in journal entries here? Because this entry will not go to any of the subsidiary books. Any of the subsidiary books or books of prime entry. So these entries, either of these entries will not go to books of prime entry. It will not go to books of prime entry. So they will not go to books of prime entry. Why? Purchase motor vehicle for use in the business. Suppose if it was purchased motor vehicle for as a merchandise, as a merchandise means for sale, then this would have gone to purchase book. It would have gone to purchase register or purchase journal. Okay, it would have gone to purchase journal. But since it is motor vehicle for use in the business, okay, for use in the business, it will be recorded in general journal. So it will be recorded in general journal. So what are the various journals? Purchase journal, sales journal, purchase return journal, sales return journal. So those are all different journals. So whatever doesn't come there will come in general journal. So what is the entry here? So motor vehicle account debit to Paul account. So we will debit motor vehicle and credit Paul. Why? Because Debit, what comes in debit? Asset is coming in, asset is coming in. So Paul, Paul is the giver. So Paul is the giver of motor vehicle. So that is why this will be debit and this will be credit. Next. So they are not mentioned about narratives. So if you want, you can write the narrative. So you can write the narrative being purchase of motor vehicle for use in business. Okay. Next, purchase of office furniture for business costing. Purchase of office furniture for the business. Okay. Office furniture for the business costing had been debited to purchases account. So office furniture you normally purchase to keep it in the office. So, but it has been debited to purchases account. So what to do? We have to reverse the entry. We have to pass the rectification entry instead of furniture account in error. Instead of furniture account. So what is the right entry? What is the wrong entry? So what is the right entry? First, you to understand this, you should know what is the right entry and what is the wrong entry. Then we have to understand what is the rectification entry. So okay. So what is the right entry? What is the right entry? Right entry is debit furniture. Should be debit furniture. What is the wrong entry? Wrong entry is debit purchase. Debit purchase. So the right entry is debit furniture and wrong entry is debit purchase. So what? How to do it? What to do? We have to cancel out this and we have to bring in this. So we have to cancel this and we have to bring this. So we have to cancel this. We have to credit and to bring this we have to debit. So what is the entry? Furniture account debit. Debit furniture. Debit furniture account. Credit purchase account. So what happens when we credit purchase? The purchase which has been debited will cancel out. So it will go off. So there should be a debit for credit. So when we have to debit furniture because that is the right entry. So we have to debit furniture and credit purchase. So the entry will be rectified automatically. So okay, this is the entry. So next, a new business opens with 6,000 of equipment, 3,000 of furniture, 1,000 of stationery. It is paid for with 10,000 capital. So 6,000 equipment, 3,000 furniture, stationery. Equipment, furniture, stationery. Debit, equipment, debit, furniture, debit, stationery. How much? So this is 6,000, 3,000, 1,000. 6,000, 3,000, 1,000. So we have to credit what? Credit capital. Credit capital 10,000. So because owner is the giver of all these things, so we have to credit the capital. Debit because these are things are coming into the business. These are the things that are coming into the business. And who is the giver? Owner is the giver. So capital is the giver. So capital, this is the investment 10,000. So that is why this will be credited. Next. Credit note number 34 for 170 received from B Jones, a supplier. has been posted to C. Jones' account in error. So what is the right entry? Received from B. Jones. So we have received credit note. So we have to debit B. Jones, a supplier. Okay. So we have to debit B. Jones. What is the right entry? We have to debit B. Jones. So to understand this again, you have to analyze the transaction properly. What is the wrong entry? What is the right entry? Then what is the rectification entry? So what is the wrong entry? Wrong entry is received from B. Jones. Okay, received from B. Jones. So we have to credit B. Jones. Credit note. We have to credit B. Jones or debit B. Jones. We have received, no. So we have received means we have to debit B. Jones. We have to debit B. Jones. Debit B. Jones. So this is the right entry. See, understand the thing. Credit note number 24 for 170 received from B. Jones. You have received from B. Jones. So you have received a credit note. So credit note means you are getting credit means you have to debit B. Jones. Understood? You are getting credit. So you have to give, you have to debit B. Jones. So what is the right entry? You have to debit B. Jones. So that is the right entry. So what is the wrong entry? What you have done? Instead of debiting B. Jones, you have debited C. Jones. You have debited C. Jones. So how do you rectify this? Obviously, you have to cancel this and you have to bring in this. So what you have to do? You have to debit B. Jones. So the entry has come in. So to cancel this out, you have to credit. So credit C. Jones. So when you pass this entry will be offset. We already debited C. Jones as a wrong entry. So when we credit C. Jones, this entry will offset. And to give credit, you have to debit. So we have to debit from B. Jones. So this is actually transfer entry, we can say. Okay, transfer entry. We are transferring from C to B. That's all simple. Okay. So this is also transfer. Which one? This is also transfer entry. So this is also transfer entry only. Because we are transferring from furniture purchases to furniture. Okay. That's all. So this is first one is error of principal. Second one is also error of principal. So this one is opening journal entry, and this is again error of principal. Instead of debiting one person, we have debited some other person. So this is activity 3.4. This is the end. So it looks very simple, but understanding should be very clear, very important. So similar questions can come in the examination. So be careful, try to understand. So you need to take a lot of time to understand the concepts. Then only your concept will be clear. Then only you can score better marks. Okay. So don't adopt for shortcut. Please practice, understand, remember, apply, do lot of hard work. So never try to resort for any shortcuts. Never do that. So dear friends, welcome back. So this is practice questions from books of prime entry. So the books of prime entry. Okay. So books of prime entry practice questions. So this is David Hopkins' latest book. So then we can just discuss this. So practice questions. So before having a look at this, you can try working out the problems, questions on your own, and then you can just cross check with this, and you can compare, you can confirm yourself whether you understood the concept or not. If you have any doubts, you can please let me know as a comment in the comment section. So if you have any doubts, please let me know. We can discuss it. So and we can try to sort it out. Okay. So practice questions. Gina sold goods on credit for 950 less 20% trade discount. So we know we have to record always at a net of. So 950 minus 20% trade discount is 760. So this is the amount we have to record. She allowed a cash discount of 2%. That will be recorded only upon the payment, not within the time of sales. So what amount should be entered in her sales journal? So our sales journal will not be recording this. We will be recording net of trade discount 950 minus 20%. So 950 minus 20%. So 950 minus 20% is 760. So this is the answer. Okay. Then Sai received an invoice from Jaya for 2000 less 10% trade discount. So we have to record this transaction at 1800. So what will be debited? Sai received an invoice means Sai has purchased. So Sai has purchased. Okay. So Sai has purchased goods from Jaya. So Sai has forgotten to enter the invoice in her purchase journal. See, purchase journal. So what effect will it have on Sai's accounts? So what is the entry? What is the entry for purchase? Purchase account debit to Sai account. Purchase account debit. Purchase account debit to Jaya's account. Purchase account debit to Jaya's account. So you have to debit purchase and credit Jaya. Why? Because then let us have a look. What is this? Deepak's transactions for May were as follows: bought goods, sold goods, bought goods, purchase it, purchase return, return goods, purchase return. So basically, this is a books of question on books of prime entry. So you have to write various books of prime entry like purchase journal, sales journal, purchase return journal, sales return journal, and you have to write cash book also. Then you have to do the posting. So it will take considerable amount of time. So you can try working out this problem on your own. So if you have any doubts, you please let me know in the comment section. So I will definitely uh, discuss this question once you let me know. Okay. So till then, have a good day. Good night.
Dear friends, welcome back to Shasha's virtual classroom. So this is the practice questions from balancing the accounts. Balancing accounts. So we will discuss this. So before this, you can just try answering yourself and you can cross check with answer. Which of the following account is most likely to have a credit balance? So capital account will have credit balance. Obviously, it is capital. Discount allowed is always a debit balance because it is an expense. Office equipment is an asset, so it is a debit balance. Rent is also an expense. So again, the question is whether the rent is payable or receivable. Since here it is not mentioned anything, on assumption that this is rent receivable, if it is assumed that rent receivable, then it is a credit balance. If it is assumed as payable, if it is assumed as payable, then it is debit balance. So since it is not clear, we will assume. So we have to choose between these two, capital and rent. So mostly it will be capital, which is always normally likely to be a credit balance. So when must the balance of each account be known? Each day, each week, when a bookkeeper is available, when a trial balance is prepared. So obviously when a trial balance is prepared. So balance the following amount at the end of September. So this is a nominal amount, discount allowed. So discount allowed. So balance. So we have to add it 234. So that is balance. See, balance is 234. So it will be carried down, but it will be carried forward straight away. It can be straight away carried forward to trial balance. So here we just put the total and carry forward to trial balance. Discount received. Discount received account. So 110 plus 120, 130. So balance carried down. So this also can be straight away carried forward to trial balance. So next one, JNP limited accounts. JNP limited account, purchase returns, bank. So this side there is total of 1340, and this side there is total of 740. So what we have to do? So 1340. So this side, to make it 1340, so it is 740. So 700. So if we put 700 here, so that will be balance character. Balance character. So 700. So both the sides, the always total should match. So 1340. So if we write 700 here, so this will match. So it will become 700. So it will be so 700 plus 450 is 1150. So then this one, George account. So what is George account? So George account, we have sold for 2300 and we have received it, we have settled. So he has paid. So everything is clear. So 2300 this side, 2300 this side. So there is no question of balance motor. Motor vehicle. So balance character, same amount. So that both the sides will be the same. Cash account. So normally it will have debit balance. Debit balance means debit side will be heavier. So 800 plus 100 is 900. So 900. This side it is 220, 45, 265. So 900 minus 265. 635. So balance carried out is 639. So the total, if you put balance, will be so to actually practically do the problem how to balance, you can see cash book problem. So the previous question 4.1, activity 4.1, there I have clearly discussed how to balance, how to write the total, everything I have discussed. So here bank account again. So here credit balance is heavier. Since credit balance is heavier, see 5,300 and this side it is 3,500. So since it is credit balance is heavier, so it will be here this side balance carried down will be this side. So 5,300 minus 3,500. So 1,800. So So balance carried on will be 1800. So this side total it is 5300. So this side also it becomes 5300. So explain why trade receivables account have debit balances while trade payables have credit balances. So trade receivables is normally an asset, so from which accounts are receivable. So they are always show debit balances because they have received, they owe us money, so owe business money. So whereas trade payable are liabilities. Dear friends, welcome back to Shasha's Virtual Classroom. Today we will discuss activity 5.1. So before having a look at this solution, you can try working on the solution on your own, and you can cross-check with the solution here so that you are confident whether you understood the concept or not. Complete the table ticking the boxes that describe the given the concept of the business. The first one is completed for you. Daily vehicles is an asset. So what is before this? Let us discuss what is liability, what is revenue, what is expense. So asset is something we have. So it is a resource controlled by an enterprise from which future benefits are expected to be. Something you own and you something that is owed to you is an asset. Okay. So what is liability? Liability is something you owe some other person. So you have to pay to some other person. So that is known as liability. Revenue or the income is that part of those items which you keep getting and which you can use for your business, running a business operation. So it is income for you. So you can it is generated regularly, or it is the main source of your operations. So expenses, the expenses which you incur like salary, rent, all those things. Okay. So rent is normally so rent is let's assume it's an expense because since they are not specified. So if you see other line item here, rent receivable. Here rent receivable is there, so this is income. So let us assume on presume things. So this is the rent paid or paid. So this is an expense. Since nothing is specified, you see the amount here. So if this was not specified, you would have written it as expense also and income also. So it is doesn't make any difference, but normally it is taken as expense. So when nothing is specified, when it says rent, it is expense. Okay. So loan is a liability, something which you have to pay back. So loan you have taken from someone, you have to pay back. So interest received is something which you get on your deposits. So you have kept some money in bank, so you have earned interest on that, so that you can use it for your purpose. It is interest received. Interest paid is an expense, so it is an expense. So we write here. So trade receivables. Trade receivable is an asset. Why? Because we have sold on credit and that person has to pay. So these are customers' accounts. So trade receivables is also known as debtors, trade debtors, receivables, bills receivables. All together is known as trade receivables. Trade receivables is something which is owed to you. So which you which is owed to you. Okay, so it is an asset. So inventory is also an asset because it is something you have held in your hand. So it has got value, you can sell and you can get money. So it is an asset again. So discount allowed is an expense because it's a loss. So once you allow a discount, you have to your money will be well lost. You will not be getting anything. So that is allowed. It is an expense. Postage is also an expense because postage is the money spent on sending the postage to courier or all those things and all. So then next postage is done. Bank account is an asset. So normally bank means it is bank balance. So normally bank means it is bank balance. So it is an asset. So rent receivable. So what is rent receivable? Rent receivable is a revenue. So it is an income which you keep getting. Trade payable. So trade payable is a liability because it has to be paid. So trade payables are liabilities. So they include trade creditors, they include bills payable. So all those money which are owed by you. So you have got on credit, you have to pay them back. So that is liability. Computers is an asset because it is something you have which you can use in business, which you are using in business. Wages is an expense. Discount received is a revenue or other income. So interest received is normally other income. So discount allowed in discount received is also other income because interest received is not main revenue from operations. Whatever is not from main revenue operations, it's considered as other income. Okay. So rent receivable also can be considered as other income. So all these are the other income. So water revenue, main revenue. So if it is a finance company, then interest is a revenue. So if it is a trading company, then sales, whatever sales you are making. So that is all revenue. So you have to be very careful with the revenue or other income. So that is the end of this is the exercise 5.1. Activity 5.1. I hope you have understood the concepts, so we can proceed further. So welcome back, dear friends. Let us discuss activity 5.2. So, and we can, okay, so activity 5.2, in which ledger would you expect the following accounts? The first one is completed to you. So, in which ledger? Okay, so which ledger? So what are the different ledgers? So there is general ledger. So there is a customer's ledger. There is supplier's ledger. So okay. So those are the various ledgers. So let us have a look at the various ledgers that are possible. So see here, these are the list of ledgers, division of the ledgers. Ledgers can be divided into sales ledger, purchase ledger, general for nominal ledger, private ledger for confidential amounts which are personal in nature and all are recorded there, and cash book for the bank and cash loans. We use cash. So sales ledger to record sales, purchase ledger to record purchases, general, other items other than cash and bank. So private ledger, so other than which is not recorded normally, which is a confidential nature, and cash book. Cash book is for the bank and cash accounts. That is whatever is received, whatever is paid, all those are bank accounts. Okay. So capital is general ledger again. So customer who buys goods on credit, customer who buys goods on credit. So it is we are selling and who is you are buying. So customer who buys goods on credit. So when you are selling, the other person is buying. So these are credit sales ledger. Supplier of office equipment. So whatever it is, whether he is a supplier of goods or supplier of office equipment, whatever it is purchase ledger. So but since it is not merchandise, okay, so it is office equipment, it is asset. So we have to be careful. You have to ask yourself whether it is asset or merchandise. So what is merchandise? Merchandise is those things which you buy to resell. So when you are purchasing office equipment, you are not, it is not a merchandise. It is not a merchandise. You are buying it as an asset. So it will be recorded in general ledger itself. So it will not be recorded in purchases ledger because it is not purchase of merchandise. Be careful. Okay. So bank account will be recorded in bank ledger itself. Bank or cash book you can say. Okay. So bank or cash book. So wages is in general ledger because it is an expense. Sales will be recorded in nominal ledger. So guys, Okay, once again, sales ledger for the accounts of customers that buy on credit. Only credit customers. These are receivables. So these are customers that buy for the accounts of customers. Okay, it is not for sale. Sales, even though it mentions sales ledger, it is not for sale, but it is for the accounts of customers that buy on credit because customers and sales are related. So purchase ledger. So even though it is purchase ledger, it is for the accounts of suppliers. It is not for the account of purchasers. It is for suppliers. So general or nominal ledger for assets, liabilities, revenue, other incomes. So revenue. Revenue is what? Sales, right? Sales. Revenue is nothing but sales. So sales are recorded in other income. So other income is like interest, all those things and all expenses. Expenses are again purchases. Okay, so all these things are recorded here. Private, so that is nothing to cash book for the bank and cash accounts. So cash book for bank and cash accounts. So very important. So again, often asked in MCQs and all. So keep a note of this. So very important. Okay, so sales is for A levels. If the concepts are not very clear, you will get hiccups. So you will struggle. So you will struggle in A levels to secure very good marks. So there is no shortcut. Please remember there is no shortcut for success. You have to put in a lot of efforts. So you have to practice a lot. Try to understand the concept. It's very important. Understanding the concept is very, very important. So this is the end of activity 5.2. So now let us continue with activity 5.3. So activity 5.3. So activity 5.3, complete the following sentences by inserting the correct word from the following list. So simple it is. So dash ledger contains the accounts of suppliers from whom the business buys on credit. So dash ledger contains the accounts of suppliers. Suppliers. Okay. Purchase ledger. Purchase ledger, no? Purchase ledger. Purchase is related to suppliers. Suppliers means those who supply material to you. Suppliers means those who supply material or goods or merchandise. Those who supply, okay, those who give on credit, okay, so on credit. So very important. So don't get confused with suppliers. Suppliers means whom you purchase, from whom you purchase, from whom you purchase. Purchase on credit. From whom you purchase on credit. Okay. So the heating and lighting account is stored in the dash ledger and is an example of attachment. So heating and account is stored in the general ledger. General ledger or nominal ledger and is an example of nominal account. Expense account. Okay. So expense account is in so expense. So the goods bought on credit are recorded in the goods bought on credit. Goods bought on credit are recorded in the again. Where do you record it? It is non-current, expense, purchase, general, sales. So we have to choose from this, right? So purchase ledger contains the amounts of suppliers from whom the business buys correct. So the heating and lighting account is stored in general ledger, correct. Example of expense account. This is also correct. This is lower. This is lower. Then again here, what else is there? Sales. Is there anything related to sales? Good, bad, or great or recorded in the? No, it's not in sales, not in sales. Non-current, no, non-current. So only three types of ledger are there. So only three ledgers. Okay, so when they say ledger, okay. So then, goods gone great are recorded in the general ledger. So then, a dash is a set what we use in the business for a long period, so non-current. So we have chosen this, nothing is related to sales. You just see the dash ledger contains accounts of suppliers from whom the business buys on credit. So this is the end of activity 5.3. So very simple thing. So you may get confused. See again, the concept should be very clear. Okay. So dear friends, welcome back to Syllabus virtual class. So classification and division of ledger. So let us have a look at the practice questions today. So which account is most likely to be kept in private ledger? So drawings, interest received, drawings, it's what is very private. So obviously drawings is very private. So how should the cash discounts be classified? So how should cash discounts be classified? Discount allowed is an asset. No, it is not an asset. It is an expense. So it is income. No, it is liability. No. Discount received. Discount received is a liability. No. Discount received is an income. Yes. Expense. No. Asset. No. So B. Explain why it can be useful to group accounts into different categories for the purpose of classification and presentation, and the account becomes easier. So discuss why a business may use more than one ledger. So again, for specialization, so we can have a group of people maintaining a specialized in particular group, and it will become easier also to verify and cross check and to keep mathematical accuracy. So this is the end of practical questions. So let us continue in the next class. Dear friends, welcome back to Shashan's virtual class. So today we'll be discussing activity 6.1. So prepare a trial balance from the following balances that have been extracted from the books of small online retailer at 31st December. So they are given assets, liabilities, expenses, all these things, you know. So based on this, we have to prepare trial balance. So before having a look at this session, I request you to try this problem on your own. So basically, it's very easy, a very simple topic. So I think you will be able to do it. So you can then cross check with the solution. So prepare a trial balance from the following balances. Okay. So how will we do it? Trial balance extracted from small online retailer as on 31st December. Small online retailer as 31st December. As on 31st December. So we have to write it in a specific format. So basically, we will have to write particulars or names of accounts. So here in the ledger folio, so debit, credit. So we will have two columns, debit column, credit column. So let us start. So before starting, so property, what is property? Property is an asset. Asset always show debit balance. Property always show debit balance. Motor vehicles. Motor vehicles is an asset. Always it shows debit balance. So office furniture. So remember one thing. What is that? So when you are learning trial balance at that time, you have to remember assets and expenses have debit balances. Normally have debit balances. Assets and expenses normally have debit balances. Similarly, liabilities and income or revenue have credit balances. By default, okay, by default, they are always assets and expenses. Assets and expenses are always debit balances. Liabilities and incomes are always credit balances by default. Okay. So office furniture is an asset debit balance. So computer is an asset debit balance. Sales is a revenue income credit balance. Sales written exactly reverse of sales, it is debit balance. Purchases is an expense debit balance. Purchase returns is exactly reverse of purchase returns, it is credit balance. Motor vehicle expense is debit balance because it is an expense. Advertising is an expense debit balance. Office expenses is an expense debit balance. Stationery is an expense debit balance. Cash is an asset debit balance. Bank credit. So it means it's a liability. So credit balance. So capital always a credit balance because it's a liability to the business. So drawings always debit balance because it is exactly reverse of capital. So now we can prepare the trial balance. So write down all the names of the accounts: property, motor vehicle, office furniture. Property, motor vehicle, office furniture. Property 100,000. So motor vehicle 18,000. Office furniture 14,000. Office furniture 14,000. Computer 2,000. Sales 40,000. Computer 2,000. Sales 40,000. Sales return 600. Purchases 6,000. Returns 500. Purchases 6,000. Return 500. Motor vehicle expenses 4,000. Advertising 1,600. Advertising 1,600. Office expenses 1,000. Office expenses 1,000. Stationery 400. Stationery 400. Cash 200. Cash 200. Bank 300 credit. Capital 110,000. Capital 110,000. Drawings 3,000. Drawings 3,000. So the total is, if you add both the sides, it is 150,800, 150,800. So it will match. So this is activity 6 point. So this is done. Okay, so this is over. So let's catch up in the next class. Till then, have a good day. Dear friends, state which of the type of errors each of the following represents. A customer's invoice has been omitted from the sales sheet. So we need to mention the type of error. So we need to write the type of error here. So before this, let us have a recap of what type of errors and what are the different types of errors. So basically, there are 6 types of errors that occur when debit and credit totals in the trial balance agree. They are as follows. So type of error of omission. What is error of omission? A financial transaction omitted completely from the books of omit. Okay, omission is nothing but omit. Omission is nothing but omit. So the name itself suggests, okay, so omit. So omit. So omission. So omitting means leaving out. So financial transaction omitted completely from the books results in there being neither a debit nor a credit entry for the transaction. This could happen if a transaction is not entered, not at all entered. Okay? So not entered in the book of prime entry. So the entry itself is not recorded. Not recorded. You have purchased, but you are not recorded. You have sold, you are not recorded. So expensive incurred, we have not recorded. So that is what example is $100 of equipment is bought for cash. The transaction is forgotten and not entered in the equipment or the cash. It is not recorded at all. So there is no debit and there is no credit. Okay. So the next one. Error of commission. Error of commission means you are giving something more. So commit. Okay, you are giving something extra. So here it is omit. You are leaving out. Leaving out or skipping. So here it is. You are giving some extra. A financial transaction is posted with the correct amount to the correct side of the wrong account. Okay. So what you have done, you have posted, but you have corrected. You have posted it to the correct side of the wrong account. Account is wrong, but the account is in the same class. Account is in the same class. So the payment for stationery is posted to the advertising account. Instead of treating it as a stationery expense, you have treated it as advertising. So both are expenses. Stationery and advertising are both class-based expenses. So same class. Okay, so this is very important. Same class. So expense or revenue or asset or liability, whatever. So it is the same class, but instead of posting to one account, you have posted to some other account. So that is extra you have put in some other account. Error of principle. What is error of principle? So you can so you don't know the accounts. Suppose someone doesn't know the accounting principles. Doesn't know the accounting principles. Ignore it. Ignore it. He doesn't know the accounting principles. So what he does, instead of recording it as an expense, he may record it as an asset or something like that. For example, a financial transaction is posted with the correct amount to the correct side of a wrong class. It is wrong class. For example, they have told, see, payment for fuel for a vehicle has been debited to the motor vehicle. So fuel for vehicle is a nominal account, debited to the motor vehicles account. So it is an asset account. So basically, revenue has been treated as capital expenditure, and capital expenditure might have been treated as revenue expenditure. Instead of the motor vehicles running expense account, motor vehicle expenses are classed as expenses when the motor vehicles are non-current assets. Okay, so it is wrong class, ignore it. So what has happened? The person doesn't know how where to record. Instead of recording it fuel for vehicle is recorded as motor vehicle itself. So that is wrong. So ignore it. Means he is not followed the accounting principle. Does not follow the accounting rules. Rules are not followed. This is same class. Okay, next one. Error of original entry. So what is error of original entry? Original entry. So at the time of recording, the first time, so wrong amount is entered in the book of prime entry. So what is book of prime entry? You record it for the first time. So there itself you have written it wrong. So wrong amount is entered in the book of prime entry for a financial transaction. A purchase invoice is entered on the purchase journal as step. See, it has been entered, but the amount itself is wrong. At the time of entering the amount is wrong. So original entry means book of prime entry. So first recording, first time recording itself is wrong. So next, complete reversal. Complete reversal of entries. Complete reversal means instead of debiting, they are credited. Instead of crediting, they are debited. Something like that. Okay. An account that should have been debited has been created, and the account that should have been credited has been debited. So a payment made to Sam is debited to the bank account and credited to Sam's account. So a payment made to Sam is debited. Actually, it should be credited to the bank account and credited to Sam account. It should be debited to Sam account because it is paid. See here the accounting principle. So whatever we have learnt in first lesson. So cash transactions and credit transactions you have to apply here. So if you are not understood there, here also you are not you will not understand. So be careful. Okay. So your concept should be logical flow of concepts. It should be logical flow of concepts. So if you understood everything before this, then even this you will understand. Otherwise, you will not understand this. So please don't try to try shortcuts in learning. Never learn shortcuts. So a payment made to Sam is debited to the bank account and exactly reverse, complete reverse. It is complete reverse. Okay, it is complete reverse. Errors will offset. So and then at all. So the compensating errors. So compensating means one will offset the other so that there is no proof at all. So they compensate one another. So two or more accounts that cancel each other out. An invoice of 1200 in sales journal is posted to the customer account as 1000 and the same amount, the sales journal is underwritten to below by 200. The debit balance on the customer's account and the credit balance on sales account will both be underwritten by 200. See what has happened? 1000, instead of adding 1000, instead of writing 1200, they have written as 1000. And what has happened? One place they have written as 200 and the other place they have not written. So because of that, they cancel out and the net effect is nil. So the debit will be equal to credit. So ultimately, what it is told here is they cancel out. Simply they cancel out. Okay, so they cancel out and the error is not at all evident. Okay, error is not disclosed. Error not disclosed in trial balance. They offset each other. One error offsets another. One error. Simple. A purchase of goods for 100 has been entered in the purchase journal. So, purchase journal, original entry. Because first, as soon as we purchase, we are recording purchase journal. So, original entry. Purchase of goods has been entered in the purchase journal. So, it is for error of original entry. Next, discount received from Mari has been debited to Maya's account. So what has happened? They have received the discount and it should be credited or debited. Yes, it should be debited. Discount received will be debited to one person. What has happened? Instead of debiting one person, it has been debited to another person. So it is error of commission. Because you have You have given credit, you have given debit to Maya instead of Mari. So you have debited. So it is correct. You have debited to, instead of one person, you have debited to another person. You have just given more, whatever, whether it is debit or credit, you have credited to one person instead of the other person. So it is error of commission. Payment or advertising added to the bank account and credited to the advertising account. So what will happen? Payment of advertisement account has been debited. So it should be debited or credited. It should be credited. It should not be debited. Correct? No? So because money will go from bank and credited to the advertising account. So it should be debited to advertising account. So it is complete reverse. Error of complete reverse. Entries were 100 too high overall on both the heating and lighting and the sales account. Okay, see, heating and lighting is expense. So expense has increased. Expense overall means expense has increased. So sales account, income also, sales account. So income also has increased overall. Okay, both are over. So expense is debit, sales is credit. So what will happen in this case? This is overadded. This is also. So debit is also increased. Credit is also increased. So it will offset. So it is compensating error. Compensating error. So next, entries 250 were too high. Overadded on the heating and lighting. Heating and lighting. So expense. So overadded to the heating and lighting. So expense has increased. Debit. And 52 low underadded. So expense, again it is expense. It has been underadded. So it has underadded and it is credit. That is also debit. So that is also debit. So this is also debit, that is also debit. Instead of increasing it, instead of adding it to heating and lighting, it has been added to rent payable account. Both are expenses. So instead of adding one to another, it has happened. So it is compensating because both are compensating. The net effect is nil. Expense will increase, expense will come down. Instead of adding this account, it has been added to this account. So the purchase of office furniture has been debited. So error of principal. Okay, office expense. The purchase of office furniture has been debited to office expense account. So it should have been debited to office furniture, but has been debited to office expense. So principal, error of principal. So the rule has not been followed. The person is ignorant about the rule. So rule has not been followed. It is error of principle. That's all. So this is error of activity 6.2. So this is a very important topic. So we have to be very thorough in this concept because this concept again we will discuss in suspense accounts. So where you will have to pass journal entries and suspense account to nullify, to rectify the suspense account and all those things. So this is very important lesson. It will actually break your head if you don't understand this concept. So try to understand this concept very clearly. Be thorough in this lesson. It's very important, particularly errors and how they are passed. So unless you know how to move forward, you don't know how to move back. So moving forward is first thing you have to know, then moving backward. So that is why a lot of students they struggle near the exams. They struggle because nothing will enter into their head. So students should start learning from the day one, so that they don't struggle near the exams. They have to struggle from the beginning, not near the exams. So ultimately, the end result will be zero. So never do that. Dear friends, let's continue with activity 6.3. See, an inexperienced bookkeeper has extracted the trial balance at 31st December 2021. It does not balance. Rewrite the trial balance, trial balance, and correct the errors. So basically, we need to rewrite the trial balance. If there is any mistake, we have to do it. So you know, all expenses all assets and expenses are debits. All incomes, all liabilities, and revenue or incomes are credits. So they are credit balances. Okay, remember? So this is the basic rule for trial balance. Remember this. All expenses and all assets and expenses are debits by default. All liabilities and revenue incomes are credit by default. Okay, by default. Normally by default. Very important rule. So before you learn this, I had this whatever. So before starting this question, so try to answer yourself and then you can have it. So plant and machinery is a debit balance, so this is correct. Loan from debit. Loan from debit is a liability, so it is a liability. It should not come here. It should come here. So office equipment is an asset, so it is debit. Wages is an expense. It is debit. So rental rates are expenses. If they are not paid, this is wrong. So 3,000 rental rates, right here. So cash is normally a debit balance. It is an asset. So it is normally debit balance. It is never a credit balance because cash can never be overdraft. So 200. General expenses, debit because they are expenses. Normally they are debit balances. Sales, yes, they are always credit because they are all revenue. Purchases, expenses, correct. Discount allowed is always a debit balance because it is an expense, it's a loss. So not here, so it should come here. And discount received is a revenue, which is gain, other income. So it should not come here, it should come here. So bank debit balance, normally trade receivables asset, always debit balance. Trade payables, yes, credit balance is a liability. Purchase returns are exactly reverse of purchases. So purchases are debit, so purchase returns are always credits. So sales returns, sales is always a credit, sales returns is exactly reverse of that, it is always a debit. So rent receivable is an income, it is revenue, it's a gain, so it is always credit, it is not a debit. Capital is always a liability, always it is correct. And drawings is exactly reverse of capital. Exactly reverse of capital. Drawings will always come here. So now you redraw the trial balance, cross check, so it should be perfect and it should be matching. So that's all. So this is a very simple question. So unless you have understood the concepts, if you understood the concept, this is very simple, very simple, very simple. So just do it and enjoy. So let's. So
This is practical questions from trial balance, lesson of trial balance. So let us discuss. So before logging into this session, you can please try answering the questions on your own, and you can cross check with the solutions here. An invoice has been recorded in J. Smith's account instead of A. Smith's account. What type of error has occurred? So obviously it is commission, because instead of giving to one person, it has been given to another person. So it cannot be compensating error. So it cannot be original entry, error of principal. So it is commission, error of commission. So discounts received $100 for January has been posted to the debit of the discounts allowed account. Which effect this has on the trial balance? Discount received 100. Discount received has been posted to the discount allowed. has been posted to the debit of the discount allowed account instead. So discount received is income. So discount received is income, but so it is credit balance. So what has happened? So it has been debited, has been posted to the debit of discounts allowed. Debit of discounts allowed. Discount allowed. So what effect has this on the trial balance? So too little debit. No, this is wrong. And 100 too much credit. This is wrong. 100 too much debit. Correct. So it can be 100 too much debit. Let us see 100 too much debit and 100 too little credit. Correct. So this can be the effect. No effect on the trial balance. No, this is the right answer. Because a credit has been affected as debit, so it will have too much too much debit because you have debited. Discount received is a credit, so you have debited. So it is debited, and you are not credited to discount received. So so you have not done this. So it is too less credit. So this is correct. Next, which of the following is not a reason to prepare a trial balance? To check that the total of debit balances equal to total of credit balances, to find to help find errors in the accounts, which is not a reason. Okay, so this is the reason to increase the sales of a business. That's also, it's not a reason. Okay, to prepare monthly reports for managers. So this is not a reason to increase it. That has nothing to do. Trial balance cannot help increase the sales of a business. So the following balances have been extracted from these books. So you can try working out this question on your own. So since you have learned all the lessons till now, so prepare trial balance. So capital is the balancing figure. So you have to put properly debit and credit, and then so let us just cross check once. So sales is the credit, so it will go to credit column. Sales return is debit because it is reverse of sales. Purchases is debit. Purchase returns is credit, exactly reverse of purchases. Wages and salaries is debit. Heating and lighting is debit because it is an expense. Rent payable is a debit because it is an expense. Rent receivable is a credit because it is revenue. Traveling expenses is debit. So telephone expenses is debit. Discount allowed is again debit. Discount received is credit. So plant and machinery is debit. Cash is debit. Bank is also debit. Anyways, it says debit balance itself, so it is debit. So trade receivables, again it is an asset, debit. So trade payables, liability, credit. Loan from Ting, liability, credit. Drawings is a debit. So balancing figure is, so capital. So basically it should be credit, but it can be debit also. So cross check, just check and put the balancing figure. It should be the balancing figure or difference. Okay, so difference between debit and credit. So that's all. This is the end of accounting system itself. So we have to continue from the next lesson. From the next session, we have to continue with final accounts, financial accounting. Okay, have a good day. So from credit transactions. This is from David Hopkins. Uh, Suppose the following transactions in the books of Gerard. Okay, so if it helps, write down the names of accounts.
So if it helps, write down the names. These are tips, okay? So these are the tips. So write down the names of accounts you should debit or credit before you start posting the transactions to them. Work out the amounts of trade and cash discounts before you post them to their correct accounts. So first, let us calculate the amounts. So trade discount, purchase goods from car, which cost $3,000 less trade discount of 10%. So 3,000 minus 10% is dollar 2,700. So then sold goods to lie $600, it will be like that only. So return goods which had cost around 200 less discount to car. So 200 less discount. So it was you had sold here, right? So far, so you had sold here. Now, uh, so it is being returned. So 20,000 less, 200 less 10% is dollar 180. 200 minus 10% is 180. So purchase goods from which limb which cost 200 before trade discount of 10%. So before trade discount of 10% means so again it will be dollar 2,800 minus 10%. 2,800 minus 10% is minus 280. 2,800 minus 10%, 2,520. So it's 2,520. So trade discount is never recorded. So trade discount is never recorded. So it is 2,520. Sold goods switch in for 1,300. So no discount here. Law return goods which had cost him $200 less. So this is lie. We are sold for 600. Lie return goods which cost him $200 less discount. We did give lie any discount. So have we given any discount? Lie? No. So then this will be as it is. So $200. So there is no discount. It was not given. So it will not be given again. So it will never be. So even though the question says debit, but we are not supposed to suppose because here they are not mentioned whether we have given them any interest. Or it may be that there is a mistake, printing mistake. So if that is the case, then less because everywhere it's 10% discount. So let us consider it's 10% discount will be 540 dollar 540. So here it will be lie return which it costs 200. So minus 10% will be dollar 180. Then Gerard paid car and limb the amount due to them after deducting 5% cash discount. See, so many big calculations. Lie and Chin paid Gerard the amount they owed him after deducting 5% cash discount. So again you have to calculate. So how do you calculate? So wait, let us see. So this goes it. So so Gerard. Okay, so Gerard. These are the books of Gerard only, right? These are the books of Gerard. Gerard paid Thor. So we are paying to Thor. So remember whose books? Gerard books. Gerard will so Thor and Lim. Okay, Thor how much we have to pay? Thor we have sold 2,700 minus we have returned. He has returned 27,180. So 2,700 minus 180 is equal to
2520 minus 5% cash discount. So this will be recorded. So this is cash discount. We recorded. So that will be how much? 239. This cash discount. Cash discount is 2.20 5% plus 126. Now, or is it? So now lie. Sold goods to lie 600. Sold goods to lie. Foreign limb. So limb. Foreign limb you are saying. So limb you write here. Lie you write here. Lie 600. How much has been returned? So 540 minus 360 minus 5%. 5% is cash discount again. Cash discount. So that is equal to 360 minus 18. 18 is cash discount. So the net amount payable will be 340. Okay, then core and lie and chin paid their own. Lie and chin. Okay, so now limb. So limb. Here is limb. Or over, lie over, or over, limb. Limb is 2800. That is 2520. So are we returning anything? Limb is limb returning anything? Are we returning anything to limb? We are not returning. So 2520 minus 5%. So that is equal to 2520 into 5%. 126. Minus 126, which is cash discount again. 5%.
output is equal to T3 line. So now Chin. Where is Chin? Chin is here. Sold goods to Chin. So Chin has not returned any goods. Okay, Chin has not returned any goods. Only Lai returned. Only there are purchase returns. We have returned to Mr. Gerard has returned to CA. Returned goods. Okay, so you can see returned goods which had cost Gerard rupees, Gerard dollar 200. Lai returned goods which had cost 200. We are purchasing. Okay, so there is one sales return and one is purchase. Chin. There is no return by Chin. Sold goods to Chin. There is no return to Chin. So 1300 minus 5%. So that is nothing but 1300 minus minus 5%. 65. 150. See, these are the calculations. So that is why it is advised that first you work out the trade and cash discounts before you post them to their correct accounts. So first, these are so many calculations. See, so many different calculations were there. Though this looks simple, some students make mistakes in even in calculating this. So be careful. So then now we'll come to the main part. So which account will be debited by how much and which account will be debited by how much. So debit. Okay, so purchase goods from car which cost 300 less trade discount. So we are purchasing from car. So Gerard is purchasing from car. So purchased. So purchases account will be debited. Account will be debited. Car account will be debited. Car account. So why car account will be credited? Because car is giving the goods. He is the person who is giving. Okay. So when we purchase, when Gerard purchased, car gave the goods. He is the person who is giving. This is the account that is giving the goods. Okay. So that's why his account will be credited. So amount will be 2700. Amount will be 27. Same. Okay, same. So now sold goods to Lai for $600 less 10% trade discount. Trade discount. So 540. So sold goods. So sales account. Sales is an income always. And who is receiving the goods? Lai is receiving the goods. So Lai account because he is receiving. Lai account will be receiving. So that is why his account will be debited and sales account will be credited. Sales account will be credited. Return goods which had cost Gerard 200 less discount to her. So return goods which had cost Gerard. So this is who is returning? Gerard is returning. So it is purchase return. So obviously when he returns, it will be purchase returns. So purchase returns will be exactly reverse of purchases. So purchase returns purchase returns. So how much? It is returned to Khar. So Khar is receiving the goods. No? When you are returning back the goods, Khar is receiving the goods. So he is receiving Khar account. Khar account should be debited. So then purchase goods from Lim which had cost 2800 before trade discount of 10%. So purchase goods from Lim. So purchase goods from Lim means purchase. Again, purchases is always purchases. Purchases account. Purchases are always purchases. So purchase account. Goods from Lim. So who is giving the goods? So Lim is giving the goods. So Lim account is created because Lim is giving the goods. Okay. Sold goods to Chin for $1300. Sold goods to Chin for $1300. Sold goods to Chin. So Chin is receiving the goods. Chin is receiving the goods. Chin account debited. Sales account credit. So Lai returned goods which had cost him $200 less discount. Lai return means this is you have sold to Lai. No? Just see it you have sold to Lai and is returning the goods. Maybe they are defective. That's why Lai is returning. So Lai is giving. So you have to give, you have to credit whoever gives, right? So Lai account will be created. And it is sales return. Sales return is reverse of sales. So it is debit. Sales return account. So then this is also done. Then now so this is also over. So this is for this. Gerard paid Khar and Lim the amount due to them after deducting 5% cash discount. So when you are making when Gerard is making the payment, who will receive? Khar will receive. So Khar will receive Khar account and Lim also will receive Lim account, Khar account, debit and credit what bank account. Bank. But one more thing is there. What is that? Discount account is also there. Gerard paid Khar. So when Gerard is paying Khar, he is not paying certain amount. So which is cash discount. So it is discount received. So it's an income. So discount received will be credited. For Khar it will be 126. Okay. Khar it will be 126. And Lim it will be again here also discount will come. Discount received. So here also it's 126. Both for Khar and Lim, discount received is 126. So bank account will be how much? Bank account will be 2394. What will be the amount? 2520. 2520 here also. 2520 here also. Khar and Lim. Khar. For how much you have to do? Or you have to debit 2700. What is the discount? No, correct. This is trade discount. Trade discount will never be done. Trade discount will never be done. So it will be recorded with this. This will be recorded with this. Then lie and chin paid. So lie and chin paid means obviously money will come into bank account will be debited. Bank account will be debited. So lie pays how much? Lie pays 342. Lie pays 342. We receive 342. So lie and when we pay, when we are receiving lesser than. So here there is no discount for limb. Limb lie return future cost plus discount. Lie 342 we are receiving. So bank and discount receipt. Discount receipt is it's not discount receipt, it's discount allowance. Discounts. So when you pay short, discount allowed is 18. So here it is 369. So bank account. So here in this case it is 1235. So discount allowed is 65. Discount allowed is 65. So chin will be credited with this plus this. So that is 13. So now you have to prepare ledger accounts and close the accounts. Prepare ledger accounts and close the accounts. So start doing this. So it's very simple. So we already done this. So you can do the rest of the part. So if required, you can do it in the next class. So dear friends, last class I had given an assignment to you. This is assignment from David Hopkins. So this is very challenging because in this your concept of books of accounts of particular person is very much important. So accounts of one particular person. Suppose the following transaction in the books of both Brian and Ken. See what is if Brian for Brian the transactions will be different. For Ken the transactions will be different. Because if he is buyer, he is the seller, and if he is a seller, he is a buyer. So here it has been asked name of accounts to be debited, name of accounts to be credited. So you should not get confused. You should not get get it wrong. So you are not so see if you write so but here the question is you have both the transactions in the books of both Brian and Ken. But here they have asked you to write name of account to be debited, name of account to be credited. But whose books? Is this are, whatever you are writing here, are these related to Brian or are these related to Ken? So, what is the best remedy? Let us, for the time being, we will consider this as the books of Brian. And for Ken, we will write separately. books of Brian. So what is Brian doing? We have to see from the point of view. So Brian sold goods. He is selling the goods. So it is sales for him. For Brian it sales, and for Ken it is purchases. So when Brian sells, who will receive? Who is receiving? Ken is receiving. Ken is receiving. And when Ken is purchasing, who is giving? Brian is giving. So this concept should be very clear. Now, Ken sold goods to Brian. So sold goods to Brian. So sold goods to Brian means what is Brian doing? Brian is purchasing. Brian is purchasing. So it is purchases because these are the books of Brian, right? So you have to write it in the books of Brian. So it is purchases for. So if Brian is purchasing, who is giving the goods? Ken is giving. If for Brian if it is purchases, then for Ken it is sales, and the other side it is Brian. So the understanding should be very clear, crystal clear. So don't get confused. Don't get confused. Brian sold goods to Ken. Again, sales. Sales. So again, it is Ken who is receiving. So if it is sales for him, it will purchases for this. So here, then Ken sold goods to Brian means Brian has purchased. So then, yeah. So if it is purchases for him it will be sales. So if it is sales this side, then who is receiving? Ken paid Brian for the goods he bought on. Ken paid Brian. So Brian is receiving money. He's receiving cash. And he's allowing discount because it is a loss. He's paying, he receive less. Then who is giving? So obviously Ken is giving. When Brian is receiving, Ken is giving. So now Ken paid no so cash. Cash is going. And he's paying less. So if he pays less, it is discounted received. So it is an income. And to whom? To Brian. Brian paid Ken for the goods he had bought on 2nd April, let's say cash. So now Ben is paying. Brian is paying. Brian has paid. Brian has paid. So cash. So he has paid less. Discount. So it is 10%. So here if it is here if it is discount received for it, here it will be cash and discount amount. And here it will be. So after doing this, you have to prepare the ledger accounts. Ledger accounts of Brian separately and Ken separately. So purchase account, how many ledger accounts is there? Purchase account, sales account, Ken account, discount received, cash account, all these accounts will come in this. and in this so many accounts. So we'll prepare the ledger accounts. Shall we prepare the ledger accounts? I will give it as an assignment to you so you can try on your own. So let me see and I will discuss this in the next class. Dear friends, last class we had discussed this problem. So you can see still on the screen. So books of brand. Okay, so books of brand. So first we'll complete books of brand. So can will be debited with sales. First entry can will be debited with sales. Can will be debited with sales. Can be debited with sales. So sales can be debited with sales. So what is the amount can you see? So the amount is 50 and maybe next. Next one, credit can with purchases. Credit can with purchases. Credit can credit can with purchases. Purchases. So what is the amount? So the amount is 500 plus discount of 4. So 500 plus discount of 4. And what is the April second? April second. So purchase is okay. So plan can debit can with sales. So 800 plus 20% discount. So 600 debit can with sales. Debit can with sales. So 600. So wait. Third. Third. So can you repeat?
So what about sales? Sales also accordingly credit sales. Okay, next one. Again, credit can be purchases. Again, credit can be purchases. Credit can be purchases. So what is the date? 920%. 6th. 6th. Okay. So, so, so purchases. We have credit again. So, can be trial for the goods bought on first April less in cash discount of interest. So credit can with cash and discount. Credit can with cash and discount. Credit can cash discount. Cash and discount. So cash and discount. How much for goods you bought on first April? We bought for 1500. So we got a discount of 3%. So 15 is 45. So discount alone is 25 and rest is paid. Rest is paid. Rest is 25. So what we did now 10. So cash is to come, cash column. So, advance paid, can how much? So then discount column. Discount column. Discount column was so let me say what is the amount? 49, 49, 48. Brand paid can for the goods he had bought on second account. So debit can with cash and discount is debit can cash and discount. Can cash and discount. Cash. So what is the date? Date. So some no. Balance is cash. How it is. So these are the pixel. This is how you have to get out. Similarly, so now you can see how it looks. So you can just now you can just have a look. So this one is C. This one is equal to this one is equal to cash. Cash also is good. So here we have to do the so it will be so can complete the document. All this document. So that is okay. So I would like to mention that all these things are very simple but very basic and very important. Unless these concepts are clear, going ahead you will get confused in a lot of other concepts. Lot of students they ignore these topics. They take it for granted, like it will just be we can't we have this is something. Afterwards, they will get some concepts from. So teachers are not used to teach you unnecessary things, redundant things. They are teaching with a purpose. The books are not written just to fill up the pages, but with a purpose. So please follow it strictly, do it sincerely, study sincerely. So now, books of Ken, I will Leave it to you. If you want me to do even that part, please make a comment in the comment section of the video. I will do it. Otherwise, I am not going to do that. It is assumed that you have understood it. So, till then, bye bye. I will Dear friends, welcome to Shasha's virtual classroom. So today I will work out problems from books of Elementary. So in this lesson we will learn how we record books of Elementary, how to prepare books of Elementary. So this is a problem from David Hopkins. So Mrugathayat had the following transactions all on credit. So purchase goods from Piccolo for $10,000 plus paid discount of 20%. Piccolo allowed him 5% cash discount. Sold goods from Snyman for $1200 plus paid discount of 10%. He allowed Snyman 4% cash discount. Purchase goods from Walters rupees 8,000 less paid discount of 10%. Walters allowed Mukherjee 5% cash discount. Sold goods to Car for $2500 less paid discount of 10%. He allowed Car 4% cash discount. Snyman returned goods which are costing $200. Return goods which are cost $400 to Piccolo. Purchase goods from Burger for 7,000 less paid discount of 25%. Burger allowed him cash discount of 4%. Sold goods to Kodak for $3,000 less paid discount of 10%. They allowed Kodak 5% cash discount. Purchase goods from Piccolo for $6,000 less paid discount of 20%.
Tickle overloading preparation calculation. Car get return goods which are costing 300. Return to burger goods which are cost dollar 1000. Sold goods to Simon for dollar 1800 less trade discount of 10%. Modified allowed as Simon calculation 5%. Receipt checks from Simon, Garg and Codes respectively in full statement of their accounts. So accounts receivable are free and send check to initial settlement of their account to Piccolo, Walters and Burger. So then enter the transactions for March in related bills of payment and closing in good form to the proper account. The transactions should be dated, however, for the purpose of activity. Ignore the dates and post the transactions to the correct books, the correct journal, and therefore and the correct ledger accounts. So we should record this in the books of payment. So where should we record this? So what are the books of payment? Purchase goods, purchase register, sold goods, sales register, purchase goods, purchase register, sold goods, we have to record in sales register. Snaiman return goods, so Snaiman, who is Snaiman? Obviously customer, so sales return. Return goods which are cost to Piccolo, so return goods to Piccolo, purchase return. Purchase goods from this is purchase goods, purchase register. Sales goods to Code, sales register. Purchase goods from Piccolo, purchase register. Car return goods which are costing 300. Car return. Who is car? Car is so obviously it is a customer only. So sales return. Return to burger. So purchase return. Sold goods to Simon, sales register. So return receive checks from Simon, car and purchase. So we have to record in file for the payment and for the amount received and for the amount we have paid. So now we have to record it. So how do you record it? The first entry, so we'll record entry wise. So first entry, purchase goods from Piccolo for 10,000 less trade discount of 20%. So we don't record trade discounts, so we never record trade discount. We have to record the transaction at net amount, so that is at 80,000. So 10,000 10,000 20% is 2,000. 10,000 minus 2,000 is 8,000. 8,000 we recorded in purchase register. So purchase register Piccolo 8,000. Purchase register Piccolo 8,000. Okay. So similarly, next sold goods to Simon for 1,200 less trade discount of 10%. So sold goods to Simon. So we have to enter in sales register. So 1,200 trade discount of 10%. So sales register Simon. So date particulars it is Simon. Simon. Sold goods to Simon for 1,200 less than trade discount of 10%. 1,080. So we have to record like this. So everything we have to record in each and every book respectively. So sales register will look like this. So Snyman 1080, Carg 2250, Odds 2700, Snyman 1620. So you can see. So so it is Snyman sold goods to Carg, sold goods to Odds, sold goods to Snyman again. So four sales entries are there. So we have to record it in this particular style we have to record. So this is known as format or whatever. So we have to record in this particular way. So the transaction should be recorded in this particular format. So format is important. So then The next one we have to record in purchases. So we have done purchase so that's so then so purchases will look like this. So we have purchased from Piccolo, Walters, Burger, and again from Piccolo 4800. So we have to enter in purchase journal like this. So take some time to write it out. Then we have to enter in sales return register also. So sales return register, what do we write? So whatever sales we have returned, all those entries. So what is it? Let us see what is the sales return. So Snyman return. Snyman we had sold to Simon. So Snyman return, which had cost him 200. No, 200. So Snyman 200. So like this, similarly we have to record all the sales return. Snyman return, uh, car also return, car also return. So Snyman and car we have to enter. So the entries will look like this: Snyman 200, car 200. So similarly, purchases also we have to record. Purchase returns also we have to record. So what are the purchase returns? Purchase returns are returned return goods which have cost 400 to Piccolo. 400 to Piccolo means obviously Piccolo has given 20% trade discount. So which had cost him 400 means that is the net discount before discount, which had cost $400 to Piccolo. So that is before discount. So we have to take after discount and we have to record it after discount. So returns, purchase returns we have to record after discount. So it's not 400. So it is $320 and burger is 1000. So we have to record it net of discount. So we have to record in sales sales register, sales journal, purchase journal, sales return journal, purchase return journal. So we have to record in all these journals. Then ultimately we have to record in cash book for the payments made and received. So what are the payments that are made? So after doing all these entries we have passed. Purchase goods. So purchase goods from Piccolo we have passed. All these entries have been made. All these entries have been passed. So now last entry received from check. Received checks. So we have to consider the discount also. The discount part, everything we have to consider. So let us make the working. So here it is. So Snyman, we have sold to Snyman worth this one. These are the returns. Total again we had purchased. Again we have sold worth this one. So total amount is 2500. So totally 2500. He has given a discount of. We have allowed him discount of 5%. So the discount amount is 125. So the net amount 2375 we will be receiving from him. So I made all the amounts, list of amounts. So these are all sales, or purchases. So these are all sales. This is also sale. These are all sales returns. These are all purchases. These are all purchase returns. Again, these are purchases. These are the cash discount. This is cash discount. This is cash discount. So this is percentage of cash discount and this is amount of cash discount. So the net amount ultimately received or paid is coming here. So we have to do like this. So first we calculate. So this is the amount, net amount. These are the amounts that are received, and these are the amounts that are discount. So we have to write it. So where do we write? So all these three guys have paid. Three guys have paid. So how much they have paid and what is the discount? We have allowed them a discount. This is the discount we have allowed. This is the amount we have received. So all these amounts we have received. And we have paid these three people. These three people we have paid. And we have got discount. These are the discount values. If we calculate, So ultimately the payment, the amount we have paid, so this is how the cash book will look like. The amounts we have received from accounts receivable, the discount we have allowed, the cash we have received, the discount we have received, the cash we have paid. So this is what is cash book, and cash book will look like this. So this we have to record, and that is also done. So now what all we did? So we entered, we recorded, we prepared sales register, we prepared sales register, we prepared purchase journal, we prepared sales journal or sales register, sales journal we prepared, we prepared purchase journal, we prepared sales return journal, we prepared purchase return journal, and we have prepared cash book also. We have prepared cash book. So now what is left? So now we have to prepare ledger accounts. So what are the ledger accounts? We have to prepare all the ledger accounts of all the parties. So sales account. Sales account is always a credit balance. So we are not supposed to record each and every entry. We have to record the total. We have to record the total in sales account. So sales account we have to record the total. So first let us do the total. So this is the total of sales, total of purchases, total of purchases, sales returns, sales returns, purchase returns, sales returns. So how do we record? So come to ledger. So sales always is a credit balance by sales journal we have to record here. So how much is it? We have to record this here. So then sales return. Sales return. Sales return is reverse of sales to sales return journal The shade screen is running. Purchases account. Purchases is always debit. So two purchases journal. So total amount purchases journal. This is the total amount we have to record here. So remember, we should never record individual entries in purchases account. So we have to record the total. Then purchase return. Purchase return is reverse. So journal, purchase return journal. So we have to record like this. Now we have to record entries related to Piccolo. So how do we record entries related to Piccolo? So who is Piccolo? Piccolo is a customer. Piccolo is a supplier, his accounts payable. So we have to credit him. So purchase. Purchase we have to record Piccolo. So how much? Piccolo 8,000. So purchase return is also there. What is purchase return? Purchase return is pay 20. Purchase return is 320. So purchase return is 320. So then we have paid. So we have got some discount. Discount received is 24. So amount we have paid. Amount we have paid is cash. How much we have paid? So you can see the cash is 11856. So we have to see here and then. So 11856. Now let us just check. So now if we add all this, so that will be Okay, so finally we have paid everything. So this is how the each and every account will look like. So we have to make the we have to do the posting. So then accordingly we have to uh, prepare all the ledger accounts. So now we'll prepare ledger accounts. So we have to see the transactions and then accordingly we have to prepare. So Piccolo we have purchased, we have purchased from Piccolo and there was purchase return of 320 and we have received a discount and ultimately we have paid. So this is how we have to record, seeing the debit side, credit side very carefully. Then Piccolo's account is over. Now we have to prepare Snyman's account. So Snyman is a customer. We have sold goods to him. So we have sold. We have returned also. So we have received. We have allowed a discount, and we have paid. So what are the amounts? Sales, sales, sales return. So the discount allowed, cash. So Snyman's account is also done. So now uh, Walter's account. Walter is a supplier, is a accounts payable. We have purchased from him. So these are the purchases. We have received discount and we have paid cash also. So the discount we have received is 360 and cash we have paid is 6,840. So we can see from the cash book. Then again burger also we have purchased from burger. So 5,000 to 250. So there are purchase returns as well. So we have we have paid cash to burger. So what is the discount? Is there no discount? There is a discount, so we'll just see. Then let us first finish this. So remember burger account, there is we have to record purchases. So then cards, carb. So we have sold goods to carb. So we have to enter sales. We have to prepare carb account. We have even made the sales return to him. So we allowed him discount. So we have to record that, and we have paid. We have received cash. So even that we have to record. Then cards account. He is a customer. We have sold him. So 2,700, and we have allowed some discount, and we have received the balance amount from him. So done. So what is left? Burger account. We didn't give discount. Let us check whether we give discount. We received discount from burger or no. Burger. Yes, 170. We paid him 4,080. Burger. We received discount of 170. We received discount of we received discount of 170. Good. 170. So cash we have paid. So this is the amount of cash we have paid to Burger. Then which account is left? We have to prepare discount allowed and discount received. We have to enter discount allowed and discount received. So discount allowed from whom email we have received. So let us see. Discount allowed. We have allowed discount to these three people. Receivables. We allow discount to account receivers only, right? So we allow discount to receivers only. So we allow discount to these three people. And discount allowed is always a loss expense. And what is the amount? Amount also you can just note down from here. What is the amount? These are the amounts. These are discount that we have allowed. So, and we have received discount from accounts table. We have received discount, so we have to record here. So it is an income. So we will credit it. So who are the tables? Who are the accounts tables? These three are accounts tables. Piccolo, Walter, and Berger. Piccolo, Piccolo, Walter, and Berger are three are accounts tables. So we have received discount from them. So the amount is this. So the amount is this, this, and this. Okay. So this is how we have to see the chapter is very simple, that unless otherwise you do all these things, unless you do all these steps, your understanding will not be clear. Your understanding of the subject will not be clear, and ultimately will get stuck in accounts receivables, accounts payables, even the advanced entries, whatever are required at that time you get stuck. So they look very simple, so at least one or two problems you have to do. So kindly ensure that you do this problem without fail. So then this is done. So what I do is uh, I will give this problem as assignment to you. So this is also from David Hopkins. So you can just try this problem on your own. So then, if you have any doubt, you can let me know in the comments. I will help you work out. I think you can do it on your own. So I am 100% sure. So please try and finish it. So we can move on to the next next lesson. So this is very simple. So one or two problems are more than sufficient. So if you want, you can do this. So if you let me know as a comment in the comment section, I will definitely do it. Otherwise, I will assume that you have understood and it's very simple. So we'll move on to the next lesson. So next lesson is how to balance the accounts. How to balance the accounts. That is what we are going to learn in the next lesson. So till then, bye bye. Dear friends, so we'll continue with books of primentary. So this is another column which is there in David Hopkins. So prepare journal entries with suitable narratives to record the following. So prepare journal entries only to ledger accounts, never to other books of prime entry. See here, journal entries with suitable narratives to prepare journal entries only to ledger accounts, never to other books of prime entry. Received from Mumtaz, invoice number 506, dated 3rd March 10,000. This was in respect of the purchase on a machine on credit. So this is the purchase of machine on credit. Okay, so it is purchase of machine. Machine is an asset. So it is not purchases. So it will not be recorded in purchases account because it is not purchase of merchandise. So it will be recorded in journal. So the entry will be recorded as machine account debit to Mumtaz. Why? Because we are purchasing from Mumtaz. Okay, we are purchasing machine from Mumtaz. So the entry will be machine account debit to Mumtaz account. debit, and as account credit. So the amount will be, so what is the date? Date they are not mentioned. So they have mentioned just A. Okay, invoice number 506, purchase of machine on credit. What is the amount? Amount is 10,000. 10,000 dollars. 10,000. So you have to write the narrations. Doing machinery purchase on credit. Write invoice invoice number 506. That's all. So we have to record it. So it will not go to purchase account. So no subsidy books of prime entry, proof of prime entry. So we have to record it in journal. Journal profit. So next, invoice number 495 dated 6th month, sold to Wayne. Goods sold to Wayne. The invoice has been entered twice in the sales journal. So had has been entered twice, has already been entered, but it is entered twice. So we have to pass rectification entry. So what is the entry when we make the sale? When we make the sale, the entry will be Wayne to sales. So now you have to reverse the entry. Wayne to sales. Now it will be sales account to Wayne's. So the amount is 675. Sales recorded twice. Now reversed and rectified. So this is also done. Next entry. So then we'll see what is the next entry. Invoice number 998 dated 7th March for 4,250 in respect of delivery van purchased on credit from Yunus and paid by check. So delivery van purchased on credit from Yunus. Delivery van purchased on credit from Yunus. So 40 to 50. 4,250. 4,250. But you see, what is the entry? What is the question? Invoice number 998 dated 7th March 4, 2002 respect of delivery in purchase entry from units and paid for by check. So there is a check payment also, but we should never record check payment because check payment will be recorded in cash flow. So only first part, which is purchase on credit from units, only that will be recorded. So remember, if you record, if you write payment entry, then it is wrong. Very well. So never do. Okay. So accordingly, you have to be very careful when writing the entries. So all these entries, which never come in any of the other books, will always come in journal proper or general journal. So this is general journal where we are recording because none of these entries are capable of being recorded in any of the prime, neither in the sales book nor in purchase book, neither sales return nor in purchase return nor in cash. So other than that, whatever is there that should be recorded in journal proper. So next, credit note number 103 dated 10th March 1 for $190 sent to Brownie but omitted from the sales return journal. So you have given credit note but you have not recorded in sales return journal. Now you record it. That's all. So sales return journal. So how do you record it? So what will be the entry? The entry will be you have to write down in sales return journal, and then the next step is you have to write down the journal entry that is you have to record the entry. So how do you record? Sales returns account debit to Brownie account credit. So you have to credit Brownie. Sales return account debit. Account debit to Brownie account. So it's narrative. So you can write down full narrative. Sales returns now recorded. Sales returns now recorded. Sales returns. Next. Invoice number 854 dated 15th March 1300 for goods purchased from Sandra. The invoice has been posted to Geeta's account in error. So what has happened? It has been posted to Geeta's account. It is entered in purchaser's account, but the posting has been done wrong. The posting is wrong. So instead of posting to Sandra, the posting has been made to Geeta. So it is purchased from Sandra. So you should have credited Sandra. Instead of crediting Sandra, you have credited Geeta. So what you have to do? You have to credit Sandra and debit Geeta. So the entry will be Sandra account debit to Geeta account debit. So the entry will be Geeta account debit to Sandra's account debit. Geeta account debit. amount wrongly credited to credited to beta. No, yes, this side. So now rectification. So this is how you have to pass the rectification entries. So here you can write, so it should be in debit column, this should be in credit column. Machine account debit, Toyota's account credit, sales account debit, balance account credit, delivery van account debit, Unos account credit, sales returns account debit, Brownie account credit, Beta's account debit, Sandra's account credit. What is the amount? So the amount is 1300. Amount is 1300. So all these are rectification entries. So if you observe, all these are rectification entries. None of these entries will come either in the neither of the books of uh, prime entry, neither in sales register, sales this one journal, nor in purchase journal, nor in sales return journal, nor in purchase return journal, nor in cash book. Neither of the books that will come in the residual book, that is journal proper. So carefully you have to do this. So this is how we have to record. So this very important aspect. So very entire chapter is based on this suspense account, rectification, suspense account. Lot of questions are asked in AS level, IGCSE also. A lot of questions have been asked. So you have to be very thorough in this aspect. The debit and credit aspect you have to be very thorough. So we'll catch up in the next class. Till then, bye. Dear friends, these are exam practice questions from books of parliamentary. So this is again from David Hopkins. So let us discuss this. So exam practice questions. So this is basically number one. Tanya purchased goods for 1000 less 25% trade discount. So trade discount is never recorded, but should be considered. So that is 1000 minus 25% is 250. She was allowed a cash discount of 10%. So cash discount will be considered at the time of payment. So entry will also be passed. What amount should she enter in her purchase journal? Purchase journal she has to record 750. So discount is never recorded at the time of purchase entry. Trade discount is recorded. Trade discount is recorded, but cash discount is not recorded at the time of in the purchase journal. It is not recorded in purchase journal. Next, Lara purchased goods costing 1800 less trade discount of 30%. So 1800 minus 30%. So that is equal to 1800, 1800 minus 30%. 1260, 1260. So that is 1260. Okay, so she was allowed a cash discount of 5%. She was allowed a cash discount of 5% means she has to pay less. So how much she has to pay less? She has to pay 63 less 5%, no? 5% of this. So 63 less. So this one. This should be how much should Lara have to pay for the goods? It is 1197. So when you subtract this one, it is 1197. So this one. Next. See, these are exam style questions. So similar questions have been asked in the AS level exam. So these are not A level exam, A level questions, but AS level. So but IGCSE also they have been asked several times. So then coming to this, Cora sent an invoice to Maria for 2000 less 20% trade discount. So Cora sent an invoice to Maria for 2000 less 20% trade discount. So okay, so 20,000, 2000 less 20% trade discount is 2 to the 4, 1600. So 1600. So trade discount will be considered, but never recorded. So we have to take the net amount. So 1600 it should be recorded at 1600. Cora has omitted to enter. She has omitted. So Cora has omitted. So has sent an invoice means she has sold. To enter in her sales journal. She has not entered in the sales journal. So obviously what will happen? Sales account will be understated by 1600, not 2000 because the trade discount will be recorded. So even Maria's account also will be understated by 1600. The answer is so then come this one. Shiung has received a check of $1540 from Raju in full settlement of a debt of 1700. How should this be recorded in Shiung's book of account? So what has happened? Shiung has received a check. So he has received a check of 1540 from Raju in full settlement of 1700. So there is a discount factor. There is a discount factor of 1700 minus 1540 is 160. So this should be recorded. Discount allowed should be recorded, and it should be recorded. How should this be recorded in Zoom? So nowhere this should be recorded. Bank account this should be recorded, and this should be recorded. We have to consider as this. We have received full money from this. So the entry will be this. This one will be recorded. So accordingly, the debit and credit aspect should be very very clear. So practice these questions again and again. Often more and more questions you have to practice. So maybe a lot of MCQs we can discuss in the meantime. But before that, let us go through the entire syllabus so that the concepts are clear. Otherwise, just by solving the question papers or just by working out the question papers near the exam is not sufficient. Remember, slow and steady wins the race. So never ever think of shortcuts. Never resort to shortcuts. Start studying from day one. So start studying from the day one. So let's catch up in the next class. Basically, the next class is how to balance the account. Till then, bye-bye. Dear friends, welcome back to Shasha Virtual Classroom. So this is balancing of account. So this is a question from David Hopkins. So basically, it's a very small question. So but In this lesson, we'll learn how to balance an account. So balancing is nothing but totaling up all the values and then finding the difference and putting it on the right place. So that is what is balancing account. So this is the last step before preparation of trial balance. After this, we'll be preparing trial balance. So before that, you should know how to balance the ledger accounts because trial balance is prepared on the basis of balances of ledger balance, ledger balances of ledger. So in this question, this is a small question. So first, let us make a list of debits and credits so that our writing the ledger entries will become easier. So let's classify and write which account will be debited, which account will be credited in which case. So paid into savings, paid is savings into business bank account 10,000. So bank account, money is coming in bank account and capital. Barne on credit, sales, Barne, sales, made cash sales of goods, the money was used to set up cash flow, made cash sales of goods, cash sales, return faulty goods to Joe, returns, returns to Joe. Joe paid by check for the goods he had bought after deducting a cash discount. So Joe has paid means paid Joe by check. So we have paid to Joe and we will receive a cash discount. So this is discount received. So then by check means obviously it's wrong. Then paid for postage by cash. So postage. So now we have to prepare all these accounts: bank account, capital account, purchases account, Joe account. So ledger accounts, prepare necessary ledger accounts, three column cash book, three column cash book, to record the transaction. So most of the entries will come in cash book also. So and some entries will come in ledger account. So then balance the accounts at 31st March and bring down the balance. So we have to balance also. So then what we'll do? So we'll start preparing all the accounts one by one. Okay. So capital account, purchases account, new account, rent account, Barney account, postage account, sales account, purchase returns account, and discount received account. So all these accounts we have to open. So now, what is the first entry? Paid his savings into business bank account 10,000. So that is on March 1st. So March 1st, bank account should be debited with capital and capital account should be credited with bank account 10,000. March 1st. should be debited with bank 10,000. 10,000. So then credited, capital account will be credited. So capital account will be credited on March 1st. March 1st. So bank account 10,000. Then first entry is completed. Bought goods for resale on credit from Joe. Bought goods for resale on credit from Joe. So that is on March 2nd. Purchases to Joe. March 2nd. Purchases purchases, sorry, purchases account should be registered with Joe. Joe account. And Joe's account should be credited. So purchases. So what is the amount? Amount is 4,000. 4,000. 4,000. Then what is the next entry? Paid rent of shop by check. Paid rent of shop by check on the same day. Paid rent of shop by check. So March 2nd. Rent on March 2nd. By check me bank account. What is the amount? The amount is 1,000. 1,000. So the entry is complete. So now come to the next. Okay. So this is our entry. So, Garnet. What date? So it's on 3rd March. On 3rd, 3rd, 3rd March. So you know why it is debited, why it is credited, right? So this all these aspects are clearly explained in chapter 1 and chapter 2. So if you have any doubts, you can just revert back to chapter 1 and 2 to see which accounts will be debited and why and all the things, so that the concept is clear. So don't assume, presume with half knowledge. Don't try to do the problem. So be sure, 100% sure before passing the entries. So don't commit any mistakes so that the concepts are clear. So if the concepts are not clear now, then everything will go wrong. So the amount is 2000. So everything will go wrong. So be careful. Done. So the entry is complete. Sales entry is also complete. Made cash sales of goods. The money was used to set up cash cash flow. So you are receiving cash on selling of goods, cash sales. So cash sales are happening. So sales are always sales, whether they are cash sales or credit sales. Or if you want, you can write it separately, credit sales and cash sales separately. So since this is a simple problem, it's okay. You can write both merged together. So cash you are receiving. How much you are receiving cash? It is 550 bucks. So 550 you are receiving cash. So when is it? It is on 3rd March. 3rd March. So March 3rd. So cash. So or otherwise you can write sales also. It's not an issue. It is not wrong to write sales. And in cash column you write. So what is the meaning of cash flow? To keep it handy. To keep it handy. Cash to keep it handy. They have sold some goods and they have kept money. So sales, receiving date, cash account, 550. Okay, now coming to the next part. Returned faulty goods to Joe. Returned faulty goods to Joe means from Joe we had purchased, now we are returning. So it is purchase returns, 200. Fifth, on fifth there is purchase returns. On fifth there is purchase returns to Joe. How much? 200. 200. Don't forget to mention the currency. So to whom we have returned? Joe we have returned. Where is Joe's account? Joe's account is here. So March 5th. What is the value? 200. 200. 200. 200. So the entry is complete. So now come to paid Joe by check the goods we had bought after deducting 5% cash discount. So cash discount. So we have to calculate how much we are paying. So 4,000 is the purchase and 200 is the return. So 3,800, 3,800 we have to pay 5% cash discount. You have to deduct and pay 3,800 minus 5%. 3,800 minus 5%. You have to deduct and pay. 190 is the discount. 190 is the discount. 190 is the discount. So you are paying Joe. Joe discount. So 190 is the discount. So how much you are paying? 3610. 3610 you are paying. So when you are paying this, you are paying this on 7th. So you are paying this on 7th. So you are paying this on March 10. What is the amount of rent you are paying? Rent you have paid 1,000. Rent you have paid 1,000 and you paid it per check. So this is also done. Now cash discount. Paid for postage by cash 20. Paid for postage by cash 20. So paid for postage by cash what date? 7th itself. Postage. Postage account. By cash 20. So postage account you have to enter in postage account also. So you have to enter in postage account. Cash 20. 7th March. March 7th. So dollar Joe you have paid, right? So where is the LB related to Joe's payment? You have paid to Joe. How much you have paid to Joe? You have received cash discount received also. Discount received and you have paid money to bank account. So bank account is 3610 190 is the discount received. So discount received also should be entered. Discount received is again So Joe has Joe done so 190. So the entries are over. So all the entries have been made. So please cross check whether all the entries have been done. So you can cross check, I am sure, but you also cross check. Then now prepare the necessary ledger accounts and three column cash book. So we have prepared three column cash book. Balance the accounts at 7th March and bring down the balance. Now we have to balance and bring down the balance. Now this part is remaining. So we have to learn how to balance the account. So this we are going to learn. This is the main thing we will be learning in this lesson. So come to cash book. So cash book, what we have to do, has everything been entered in cash book? Cross check once if everything has been entered. So then what you have to do, you total it up. So you total it up like this. So when you total it up, obviously okay. So you see in the cash column there is a total of 550 on the debit side. Bank column there is a total of 10,000 on the debit side. Discount column there is nil. Here discount column there is 190. Cash column 20 is in credit side. Bank column there is 4610. So how we have to balance is this side is heavier, this side is heavier, this side is heavier. So this minus this side minus this side, this minus this. So basically balance carry down your pressure. The balance carry down your right. Then what you have to do? You have to find the difference of this value and this value. You have to find the difference of this value and this value. So whatever comes, that you have to write. So is equal to 10,000 minus 4610. So 5390. See, when you put this value, this both will become equal. So the total should be such that whatever amount you put, the total will be same. See, this should be same. So to find that, we have to put that balancing figure. This is the balancing figure. That's why it's called balance current. Similarly, here it is 550. Here it is 20. So what you have to do here also 550 minus 20, 530, so that even this both the total becomes 550. And what about discount column? No, never. Discount column should never be balanced because it is just it is not part of double entry. We are just posting it. So we should not. We have to write this directly to the ledger account. So it is discount received we have to write as it is. We should never balance this. Remember, we should never balance discount column. Never balance discount column. If you balance discount column, it's wrong. So when you are doing cash book problems in AS level and IGCSE, you may be asked one or two cash book problems. So never balance the discount column. Should never balance the discount. Then here, capital account should be balanced. So now I'm coming to here. This is the cash book is over. Cash book is done. So this is known as both book of prime entry and book of secondary entry also. It is ledger also because cash, it is cash ledger and bank ledger. So it is cash ledger, bank ledger. So that's why we never record, we never prepare ledger account for cash and bank. This is both. So it is both primary and secondary book. So now we have left out with the other accounts. What are the other accounts? Capital account. So capital account this side is 10,000. So this will become balance, carry down 10,000. So that both the sides are equal. So this is how did you get this? This is 10,000 minus 0 because nothing was there on the debit side. So the same value will come. So here the amount is same. So this will become balance carried down will become balance got down. When is this? This is March 7. So total 10,000, 10,000. So balance brought down will be again 10,000. Balance brought. Okay. So normally nominal accounts like purchase account and sales account, they are not balanced. Why they are not balanced? They are directly taken into trial balance. They are just totaled and taken into trial balance. So rent account is not balanced. So you have to just total it up and take it directly to trial balance. So Joe's account. So if you see both the sides are matched. So both the sides are same. So there is no question of balancing at all. So every both they are already balanced. There is no balance brought down or carried down. So carried down. So that will be same amount 2000. So again the total is same 2000. Total should be same on both the sides. Remember both the sides total should be same. So these are the totals. So what happens is 8th March 8th, they become opening balances. March 8th, they become opening balances. They become balance brought down. You have to bring down the balance. So that is 2000. So postage account is not balanced because the nominal account directly transferred to this one trial balance. Sales account directly taken into sales account directly to trial balance. There is no question of balance. Purchase returns you should not do. So you should just directly take it to the thing trial balance. The discount receipt Geo account directly taken to trial balance. So what should be balanced is only the personal and real accounts and assets and liabilities. That's all. Always assets and liabilities should be balanced. So whether they are non-current assets, non-current liabilities, current liabilities, only they should be balanced. In other words, the balance sheet items. So they are called the items of balance sheet. So these are assets. No, cash is an asset, bank is an asset. So it is something which we always keep. So it will always be running. So that is why. So see here, balance carried down will become balance brought down in the next year. So it was balanced on 31st March. On 7th March, the balance was 530 rupees, $530 and $5,390. So which became opening balance on 8th March, that is $530 and $5,390. So this is how we have to balance. So this is done. Goodbye. Have a good day. Hello, dear friends. This is one simple lesson with the classification of bonds and division of a ledger. So we have seen in part one, we have read everything about it. So this is a simple practice exercise, just to question up. So we can just discuss this. Complete the following table to indicate whether or not following statement is correct. The purchase of motor car is revenue expenditure. It's false. It's not true because it is capital expenditure. It's false. So then the payment of wages to employees is revenue expenditure. So the account of customer is kept in sales ledger. The accounts for customers are kept in sales ledger. No, no, no. False. The repairs of the office windows is an example of capital expenditure. False. It's revenue expenditure. It's not capital expenditure. The purchase of office stationery is revenue expenditure. True. The sales account is a nominal account. True. The figure and fittings account is a real account. Fixtures and fittings account is a real account. True. Suppliers accounts are kept in nominal ledger. False. They are not kept in nominal ledger. They are kept in specific suppliers accounts, payables ledger. The day-to-day cost of running the business are an example of revenue. Yes, true. Revenue expenditure. So complete the following sentences by inserting the correct word from the following list. The sales account records the dash of the business and the example of dash account. Complete the following sentences by inserting the correct word from the following list. The sales account records the revenue is an example of nominal revenue. Nominal account. The purchase of new machine is an example of capital expenditure. Non-current. Non-current expenditure and account is an example of real account. Small item expenses expenditure recorded in petty cash. A dash asset is bought to keep the business for a long period of time. Non-current asset again. So here it's not non-current. It's capital expenditure. capital expenditure. Okay. Very simple problem. Welcome to Shasha's first year classroom. So today we'll be discussing trial balance. How to prepare a trial balance, and so here you can see there is a practice exercise. This is from again from David Hopkins. So you can see they have given all these things, all the details, sales, returns, purchases, all they are given. And prepare a trial balance as at 31st March, 31st December 2015 from the balance extracted from accounting books and calculate the balance on its capital. So we are supposed to prepare the trial balance. So how do you prepare the trial balance? So the trial balance, the format of trial balance is something like this. So trial balance as on 31st December 2025, particulars, debit, credit. So it is a statement, okay? So it is a statement. That's why it is trial balance as on 31st December 2015. So we have to just plug in the figure. So they would have given the details. We have to just plug in the figures. What will come in debit and what will come in credit. Sales. Sales will always come in credit. Sales return is opposite of sales. Sales return will always come in debit. Purchases always debit. Purchase return always credit. So you have to understand this. Whatever you have learned till now, you have to apply, and then you have to prepare the trial balance. So coming to the question again here. See, the question is here. So remember one thing. Before preparing trial balance, just remember one thing. Assets and expenses, wages, heating and lighting, all these are expenses, are all debit balance. They should be all be debit. So this will always be debit balances and they should appear on the debit side. Okay. So remember this, learn this by heart. So this is very much helpful. Very basic foundation to for balances. Then liabilities and income. Liabilities and revenue are all. So external are like loans, accounts payable, all those are liabilities. So payables, all payables are liabilities. So these are all external liabilities, these are internal liabilities. So whether they are internal or external, they are always credit balances, revenue or income are all credit balances. They always go to write on the credit. So simple. So unnecessarily don't exaggerate, learn a lot of things, nonsense and all. Just remember this. You can do. You have to just identify whether the given particular item is debit or credit. So sales is a revenue. So it is an income. It is a credit balance. So sales return is a debit balance. So purchases is a debit balance. Purchase returns, purchase return is again credit balance. Wages is again debit balance. Heating and lighting expense debit balance. Rent payable expense debit balance. Rent receivable income revenue debit balance. Advertising expense debit balance. Postage and telephone expense debit balance. Discount allowed expense debit balance. Discount received income revenue debit balance. Plant and machinery asset debit balance. Delivery van asset debit balance. Bank balance asset debit balance. trade receivables, asset, debit balance, trade payables, liability, credit balance, drawings, opposite of capital, that is always debit balance, drawings by default credit balance, but it is balancing figure. So you have to put accordingly, you just put it on the debit side or credit side, and then you can you total it up, you'll get the value. So we'll just do it. So we can prepare the trial balance. So seeing the question. So here you can see this is the question which is available. So you can make down, note down, or take a screenshot or whatever. Or if you have the textbook, you can use it. Or is an expense. Rent receivable is an income. So it should come on credit side. Rectify it. Or advertising is an expense. Postal telephone is an expense. Discount allowed is an expense. Discount received. So see rent receivable. So rent receivable is an income. So discount received is an income. Plant and machinery is an expense. Is an asset. So always a debit balance. So then delivery van is an asset. Always a debit balance. Bank is an asset. Debit balance. Trade receivables is an asset. Debit balance. Trade payables is a liability. Drawings always a debit balance. So then when we total it, we get these values 210,000 and 175,000. So capital will be the balancing figure. So what you can do is 2 lakh 10,000, 210,000 minus 174,000. So see, when you put this will both tally. So this is balancing figure, simple. So it's very simple. So lot of questions are based on this balances, concept of balances. We'll be often using this technique in solving lot of problems. So be prepared. So we'll just finish this and we'll just see the next problem. So next problem is an inexperienced bookkeeper has extracted the trial balance as at 31st December from RT books. It contains some errors and does not balance. Premises, this is correct. Or plant and equipment, this is correct. Office equipment asset, correct. Wages is correct. Rent payable is an expense, so it should not come here. So it should not come here. It should come here. So heat and lighting correct. Other operating expenses correct. Sales is correct. Purchases is correct. Discount allowed is an expense. It should come here, not here. So discount received is an income. It should not come here. It should come here. Bank account is a debit balance, correct. Trade receivables is a debit balance, correct. Trade payables is a liability, it's correct. So purchase returns. Purchase returns are opposite of purchases. It should come on the credit side. So it should not come here. It should come this side. So sales returns. Sales returns are reverse of sales. They should be debit balance. It should come here. Rent receivable is an income. It should come this side. Capital is a liability. Drawings should not come here. Drawings should come here. So that's all. So you can do this as a assignment. So it's very simple, very easy. So this chapter is done, and this is the end of bookkeeping. So we'll see. We'll start financial accounting in the next class. Till then, bye bye. So dear friends, welcome to Shosha Virtual Classroom. So we'll be doing exam practice questions. This is again from David Hopkins. Similar questions are being asked in next level examinations. So this is from statement of financial position. Okay, so statement of financial position. Now multiple choice question. The purchase of an office computer has been debited to office expenses. So where should that be debited? Office should be debited to non-current asset, right? Because it is office computer, so it is non-current asset. So you should go to non-current asset. Whereas they are debited to office expenses. So what has happened? The profit has come down. So the profit has come down. The profit is understated. The profit is understated. The profit is understated. And even net current assets is also understated because it has not been shown as a part of non-current assets. When you don't show, then the assets will be understated, right? So this is the answer. Simple. Okay. Then next one. So the owner of a business has taken goods for her own use, but no entry has been made in the books to record this. Oh, so it has not been made. So what happens? What row will show the effect of this on the statement of financial position? So what happens? Oh, inventory will be showing higher. Inventory will be showing higher because inventory has not been recorded. Drawings has not been recorded. So it will be showing. It will be overstated. What will be overstated? Inventory will be overstated. So then what happens? And even obviously the double effect, to complete the entry, you would not have debited to capital account. So the capital also will be overstated. So this is the reference. Okay. So the following information has been extracted from a statement of financial position as of 31st December 2015. Non-current assets are 310,000, working capital is 30,000, long-term loan is 20,000, profit per year is 35,000, drawings is 25,000. So non-current assets, working capital. So what are the steps? You have to add non-current assets and working capital, right? So you have to add the non-current assets and working capital. So that will be 3,40,000, 340,000. So long-term loan you have to subtract because it is non-current liability. Non-current liability you have to subtract. So that should be 320,000. So 320,000 is net assets. So we have done the problem already. So net assets should always be equal to capital. So what is the net assets? Net assets is 3,20,000, 3,20,000. So what was the balance on the capital account on 31st December 2015? So this has no relevance. This has no relevance. So if the concept is clear, you will not even think about these two items. You will just straight away see this and you will select this. So that's why the concepts are very, very important. You have to clearly understand the concept. If you are not understood the concept, then you will get this wrong and you will mess up. So don't be in a hurry when solving MCQs. Be careful. Carefully you solve the MCQs. Explore all the options. Be conceptually perfect. Be conceptually strong to secure A plus in A levels. Okay. So don't be in a hurry. Never be in a hurry. So which of the statements is not correct? Assets is equal to liabilities plus capital. Correct? No, liabilities, assets is equal to liabilities plus capital because assets is equal to liabilities. So capital is also internal. So internal liability. So this is correct. Okay. So capital is equal to assets minus liabilities. This is also correct. Just now we did assets minus liabilities is equal to capital. This is also correct. Then capital minus liability. Capital is also liability. This is also liability. They cannot be equal to assets. This is wrong. So this is the correct answer. So liabilities is equal to assets minus capital. Correct. Assets minus capital will always be equal to liability. So you can do this using the formula. So by substituting here and there this one. So you know that, right? So assets is equal to liabilities. So you might have already learned this. in basic accounting like accounting equation. So you might have done a lot of problems also based on this. So if this is the first lesson that is taught in accounting, so you must be knowing this. So when you just crisscross this, when this comes this side, it becomes minus. When minus comes this side, it becomes plus. So all these things, if you know this basic simple math, then you can do this. So simply, so this is the answer. So this is over. So we have covered statement of financial position, one simple problem also we had an MCQs also. So you understood the concept very clearly. So please share, please spread the knowledge, please share so that others also get the benefit of my classes. Okay, so please share. Thank you. Have a good day. Good night. Dear friends, welcome to Shasha's virtual classroom. So today we will be discussing statement of financial position. So we will be, this is very important class. So please have patience and focus on this. It's very important. Okay. So statement of financial position. Financial position. So first step is non-current assets by default. Okay. So non-current assets. First, you should understand what are non-current assets. So you have to make a list of non-current assets. The trial balance should have been given. So from that you have to make a list of non-current assets. So what are the non-current assets? Non-current assets are those assets which are intended to use in the business for a period of more than 12 months. For a period more than 12 months from the date of financial statement. So very important. Okay. So non-current assets are those assets which are used, which are meant to be used in a business for more than 12 months from the date of financial statements. So what are financial statements? Statement, income statement, statement of financial position, and cash flow statement are known as financial statements. So basically here, what all is included? So you have to include, you have to prepare the list in such a way that most permanent ones are written down first. For example, land and building. Land and building. How many years do you use land and building? Maybe forever. So land you will never intend to sell. Normally you will never intend to sell. And building maybe you may again you may change it after maybe 15 years or 20 years or maybe after 25 years or 30 years or something like that. But land will never be. It's not in that. So it is more permanent. It is most permanent. Then so non-current assets are those assets which are intended to be used in the business for more than 12 months from the date of financial statement, and they should be written down in the order of permanency. So first land and building, then plant and machinery, vehicles. So based on whatever the items the business has, based on that you have to use your common sense and you have to prepare the list. So that is the first step. You have to prepare, you have to write down the list of non-current assets. Then second one is current assets. So what are current assets? Current assets are those assets which may vary. So immediately after 12 months, they say in the very next day they may change. So They are inventories. So what are inventories? Inventories are merchandise which are lying in the business after the on the date of preparing the financial statement. So inventory. So that is one thing. Then trade receivables. So what is trade receivables? Trade receivables are credit customers. Credit customers from whom we have to receive money. So to whom we have sold on credit and we are supposed to receive money. And the third one is cash and cash equivalents. Cash and cash equivalents. What are cash and cash equivalents? Cash and cash equivalents means it can be cash at cash in hand, cash at bank. So maybe those fixed deposits which are immediately which can be immediately materialized, like very short-term cash deposits. So all those are cash and cash equivalents, particularly cash and bank balances. So we have, this order is important. So it is recommended that the order of these assets should be in this particular order. So again, the items they are based on the question. So whatever details have been given in the question, based on the items that have been given in the question, so the current assets, list of current assets should be. Then third one. Then third one is current liabilities. So remember, this is with regard to financial statement of sole traders. Okay, these are with regard to financial statement of sole traders. Because when you are preparing financial statements of company, the format is entirely different. The format is entirely different. The items are same, but the headings are same, but they have to be shown that the form of presentation is entirely different in case of companies and other entities. So be careful. So this is meant only for sole traders, and you have to learn this. You have to learn this how to go ahead with this preparation of statement of financial position, current liabilities. So what are current liabilities? What are current assets? Current assets are those which change within a period of 12 months. Inventories today, inventories may be something else. Tomorrow there may be something else. You keep buying and selling the goods. So similarly, trade receivables. So you keep selling, you keep receiving the money, so they will not be same. Cash also, cash will be receiving and paying. So that's why this will not be same. So because of this, all these are, what do you say? They are dynamic in nature. They are dynamic in nature, means they keep changing. So this is another way you can remember. You can just use your common sense to identify and make a list of current assets. What are current liabilities? Current liabilities are, see, trade payables. Okay, so what are trade payables? So credit suppliers. So you have purchased goods on credit, you have to pay them after some time. So maybe after 30 days, after 35 days, 40 days, after 35 whatever. So you have to pay. That is what is bank loan. So then that is what is bank loan. So then what you have to do when you are preparing the financial statement? So remember, first you have to write non-current assets. Non-current assets you have to write. Then you have to write current assets. Then current assets. So figure total. So then this one again, current liabilities total. So what you have to do is you have to find out current assets minus current liabilities. You have to calculate current assets minus current liabilities. So that is called working capital. So what is current assets minus current liabilities? So 2 minus. Though you are not required to write what is working capital, you don't have to write this. This is just for you to remember so that you don't mess up when you are working out the answer. So always remember 1, 2, 3, 2 minus 3. So whatever amount comes, you have to write here. then fourth one. So non-current liabilities. So what are non-current liabilities? Liabilities that are payable more after a period of 12 months from the date of balance sheet. Okay. So more than or after 12 months from the date of balance sheet. For example, bank loan. So bank loan normally when you will pay after a period of maybe pay after 2 years, 3 years, or it may be even pay 10 or 15 years also. So that's why it has payable after a period of 12 months. So what is the example, best example for this? Maybe you have taken a bank loan. So maybe you have taken long-term loan for many years. So which has to be repaid after a period of 12 months from the date of statement of financial position. Okay. So then even that you have to add. You have to add this. You have to add all this. So you have to add bank loan, long term loan. So you will get one figure. This item you have to subtract. You have to subtract from this, and this is called net assets. Net assets. What are net assets? All working capital minus working capital. So net assets are nothing but non-current assets plus working capital minus non-current liabilities. What is working capital? Working capital is nothing but current assets minus current. So very important, don't get confused with, don't confuse yourself. Very important. So first we have to find out non-current assets. To that we have to add working capital. So what is working capital? Current assets minus current liabilities. Current. Okay. Current assets minus current liabilities will give working capital. So from that again you have to subtract non-current liabilities. So that gives net assets. So then the fifth item. The fifth item. What is the fifth item? Fifth item is owner's equity. Fifth item is owner's equity. Okay. So what is owner's equity? Capital at the beginning add net profit so less points. So the net amount will be the capital owner's equity. Okay. So that net amount will be owner's equity. That is the capital. So ultimately this should be equal to net assets. So finally net assets is equal to owner's equity. You have to follow these steps particularly in this particular order, specific order. Just follow this. You can do any damn problem in statement of financial position. as far as sole traders are concerned. So we will just work out one another problem, one simple problem to demonstrate this, how to find out how to prepare statement of financial position. Till then, have a good day, goodbye, good night. Dear students, dear friends, welcome to Shasha's lecture classroom. Today we will focus on important points in income statement. So they are very very important in the sense that most of the students they commit mistakes. Often they think whether we have to how to treat a particular item. So to start with, important considerations in preparing income statement. So income statements are often prepared in vertical form. Since it makes them easier to read, you should study and learn the vertical form carefully until you are quite familiar. So there are various forms. There is a horizontal form also, and there is vertical form also. But 99% of the cases you will be doing vertical form. So you will be preparing income statement in vertical form. So it is very essential for you to study and learn the vertical form carefully until you are quite familiar with it, so that you can work out the problems with ease. Do not prepare journal entries for the income statements unless you are specifically asked to do. They might have been shown in the chapter simply to help you understand how entries are made. Okay, so there are so many entries. If you look into the chapter, uh, income statement chapter, you will find couple of entries. They are not important in the sense they are not important. So you don't have to prepare unless otherwise they are asked for. So you can just know it. So in the examination, unless otherwise they are asking you to pass journal entries, you are not supposed to do. The heading is important. Okay, so the heading, when we start any problem, the first thing, the heading is very important. The fact that it is the income statement for the year or month ended, so you have to write it as income statement for the year ended. The statement covers a period of time, so it is necessary to state the period covered. Okay. Goods taken by trader for personal use. Some goods, sometimes the trader may take out some goods for his personal use. So what we have to do, deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So they would have given selling price also. So you should not get confused. You have to always deduct at cost price. You have to deduct goods taken by the trader for personal use from purchases and add to drawings at cost price. So the adjustments will be reflected two places. Carriage inwards. Carriage inward is taken as part of cost of sales, not an expense. Okay. So carriage inward is, what is carriage inward? Carriage inward is the amount spent on getting the goods inside the premises where goods are being traded. So that is why they are called carriage inward. So to bring in the goods inside for the trading purpose. So that's why they should be added with cost of sale. To sell the good, those are the expenses incurred to sell the good. That's why they are added to cost of sale. We should not treat it as an expense, like expense in the sense which we have to show below the line. So it should be considered as part of cost of sales. Carriage outwards. The cost of delivering goods to a customer is carriage outwards and is debited in the expense statement as an overhead expense. Okay. So it is debited as an overhead expense. Double check the treatment of carriage inwards and carriage outwards. So carriage inward will be reflected in cost of goods sold and carriage outward will be reflected in overhead expenses. Wages treated at the cost of sales. So goods purchased may not be in a suitable condition for selling to customers. Sometimes what happens, they may buy the goods and they may do some work on it. So further work may be required to them before they are sold. So maybe some rectifications maybe there or some final touches should be remaining. Some work is pending. So on that you may spend some money. So the wages paid to employees for performing this work. Which work? The additional work on the goods. Okay, so this work should be debited as part of cost of sale. So those particular part that particular part of expenses, the costs which are incurred to improve the product. This should be treated as part of cost of sales. Gross profit. The gross profit is the profit earned on selling goods before any other expenses are taken into account. So, sales minus sales returns will give you net sales or net revenue. So, to that you have to from that you have to subtract all cost of goods sold. So, what is cost of goods sold? Cost of goods sold is nothing but opening inventory. To that we add purchases less purchase return. So, to that we add carriage inwards, and from that again we subtract the closing inventory. So what we get is cost of goods sold. So what do you have to do? From that, once from net revenue, we have to take out cost of goods sold. Then what we get is profit. So gross profit. So what is gross profit? Gross profit is the profit earned on selling goods. Okay, the profit earned on selling goods before any other expenses are taken into account. When there is no trading account, when there is no trading, there is no gross profit. It's very important. Okay. Some cases you may be asked to prepare a statement, income statement, where they would not give any opening inventory, closing inventory, even purchases may not be there, sales may not be there. For example, in case of service industry, service people who are rendering services, service business, they may not have any inventory. So then in that case, gross profit, the question of gross profit doesn't arise. The words cost of sales and gross profit are important and should always be shown. Okay, so never miss out. In a hurry, what most of the students they do, they forget to write cost of sales as a heading. They forget to write gross profit. So that should be avoided. So you should be very careful. So you have to write it. So the words cost of sales and gross profit are important and should always be shown. Should means it is mandatory. Always include the words cost of sales and gross profit in full. So avoid using short forms. So you cannot write PCOS, GP or something like that. So you should not use short forms. You have to use full form. You have to use full words. Include the words, full word. Okay. So you cannot use the short words. Any other income. You should add any other income to gross profit. So suppose you have got other than sales, if you have got any other income, you have to add it to the gross profit. Never treat it as a negative expense. Negative expense means don't deduct it from expense. Never do that. So you should not show it as negative expense in the expenses column. You have to just add it to gross profit. So because that is also income, but it is not from trading, it is other income. So that's why it should be added to gross overhead expenses. So we have to after you add up other expenses, there are overhead expenses uh, which you have to show. So there is no particular order in which overhead should be shown in the income statement of sole trader, but it is often best to place the larger amounts before the smaller. So there is no particular order, which is not mandatory that you have to show it in particular order. But it is often best, it is a best practice to place the larger amount before the smaller, so that you show the bigger amount first, then you show the smaller amounts. It is also a good plan to group together similar kinds of expenses. For example, property expenses, rent, heating and lighting, and insurance. So you can club up the similar type of expenses and you can show. There is no such prohibition that you have to. So, and this is not compulsory. So this is what do you say? It is an option. So it is better if you do it. So the examiner will be impressed. Profit for the year figure. The profit for the year figure is important. You will need to use it when you prepare the next document, the statement of financial position. So profit for the year, you have to show. The profit for the year is important. You have to show after the end result is profit for the year. You need to use it again when you prepare the next document. So the next the chapter after this is statement of financial position. There you will be using the net profit whatever you calculate. Other chapters where income statements is prepared. See, income statement is very important. So it's very important in the sense again when you study accruals and prepayment, this is another lesson. So another chapter, the matching concept. So in this also, we incorporating this, you have to prepare income statement. So again, there is one more chapter, provision for depreciation of non-current assets. Again, There also you have to incorporate the depreciation and you have to prepare income statement. Irrecoverable and doubtful debts. Again, there is another lesson, another chapter called irrecoverable and doubtful debts. There also you have to incorporate these things and you have to prepare income statement. So this is the income statement is the base. So to that you have to make lot of other adjustments. So incomplete records. Even in case of incomplete records, you may be required to prepare income statement. Not-for-profit organizations. See, not-for-profit organizations means clubs and societies. So there may be a bar or cafe or something like that. So there they may be doing some sort of business. They may buy some inventory, they may sell something. So all those things. So even there you need to prepare income statement and you have to show it as income. There also you need to. So it is very important lesson. So very important. So but this is the base and you have to learn all this as a comprehensive. So that is how, that is where a lot of students commit mistake. So you have to be very careful, you have to be very attentive, you learn each and every aspect, learn every lesson carefully, learn every chapter carefully, work out all the problems before attempting the main examination questions. You have to be double sure, you have to be thorough in these particular aspects. Income statement is prepared in different forms. See, there are partnership accounts. There also you have to prepare income statement, but the profit is shared between the partners. So that is one difference. An introduction to the accounts of limited companies. There also you have to prepare income statement, but the format is entirely different. The form is entirely different. Manufacturing accounts, where manufacturing account, there are so many other aspects. There are a lot of details given about manufacturing entity. So there also you have to show a lot of other aspects, and there also you have to prepare income statement. So income statement is overall, in overall it's very important, and lot of questions are asked from income statement. So you have to be, it's very important topic. Okay. Income statement of service business. See, people who sell their services such as accountants, lawyers, dentists only require income statement. So they don't need trading account. So that is there is no question of preparing finding out gross profit because there is no trading. So if the business is a service business, one which does not buy and sell goods, then there will be no cost of sales. Okay, there is no cost of sales. You will need to show the income, which will be the fees received less the expenses to leave profit for the investment. So it's very simple thing. Okay, so keep these points in mind. This is very important. So then in the next lesson we will start with working out the problems. Okay. So dear friends, coming to income statement for sole traders, the following trial balance have been extracted from Hadley books as at 31st December 2015. So this is extract from this is from David Hopkins. The following trial balance has been attracted from Hadley books as at 31st December 2015. Plant and machinery 25,000, office furniture 6,000, inventory 1st Jan 11,000, trade receivables 4,740, trade payables 1,000, bank 3,327, loan receivable 4,000, sales 72,800, purchases 28,540, sales return 1,600, purchase returns to 144, wages 3,100, rent 4,000,